What's up, everybody? Good morning. Welcome to the stream. Good morning. Hold up. Turn this down. All right. What's up, y'all? What's going on here? Good morning. What's up, y'all? Good morning. All right. Let me get situated here. What is up, friends? How y'all doing? Oh my God, morning. What's up? Billy Joe, Plan Zero, Simon, Dustin, Thomas JK, Future Thomas, Escapism, Etai, Johnny, and Nate. Everybody that's here. Pre-market, let's go. Market opens 20 minutes here early, just checking out. Man, don't you guys love our calculations? I'm gonna tell you something. That monthly edge pressure, ooh, is a beaut. Let me refresh my platform here. Oh my God, that was a great. I didn't take it, but I was watching it. I'm slapping myself for not taking it though. Oh my God, look how great our pivots are. 59.84 printed last night at 5:45. Right on the dot there. I always smile. I can tell you guys every day. Y'all see me with my little sly little smile. Like I know something. Why are my glasses all smudgy, dirty? The dog licks my face too much. That's what it is. Enjoyed the class yesterday. Did you guys like the class yesterday? The first one. How did you like the first starting point of the class? It's like the summary of everything, right? What we're doing and kind of where we start. Booyah. Howdy. What's up, Jack? Morning. I'm for a big ball this morning. For a solid afternoon long. Yeah, so let me teach you guys something that I look for on these big catalyst updates that move, right, and have the first support. This is S&P futures. This is something to take with you. Is market back? Bull market is back as of yesterday, but we'll have to see what the print is today. So right here, right? Anything down in here that supports, right, for greater up. I'm looking for something like that too. I'm not against what you're saying. The afternoon Zooms are priceless. Ooh. Did you guys get your $1 worth? That's all I'm asking. You know, was that definitely worth your time? We do this for the love of the game. A buck a class, right? How cool is that? It's literally like a tip. So it's a tip for your bartender. Thousands of people take that course, so you know it's like very much our pride and joy of what we do here. Why my speakers keep turning on and off, I don't even know. I might need to reboot my computer. So like, I woke up this morning with my throat hurting again. It's like, I don't know if iDoc and I are like passing the virus back and forth to each other by just being in the same room. I woke up this morning, oh no, my throat is hurting again. This can't be good. Maybe it's just a one-time thing. Hot for the afternoon Zoom classes every single day. How about that? So right now, you guys can get the membership to the platform at half price for the first month and check out that. It also comes with the Zoom classes. Big news bar, increased chance we trade back there. No. Like one thing is that markets don't want to return. Like this is the thing I like to teach people too that I've noticed in years trading. Great question, by the way. Hold on. Let's do our pre-market. You guys know the drill. Get all of our stuff front and center. Is that markets like, let's say there's a gap open and markets want to fill gaps. And markets still want to do anything. Market has no memory, no desire, no care of any of that stuff. So because there's a news day that moved the market up, the market doesn't want to retrace. The market just wants to do anything. If it moved up because the market wanted to move up, where the market is right now is where the market wants to be. And so that's like one thing that I hear people say, you know, when a gap fills, it's like, see, the market wanted to fill the gap. But for every gap that's filled, there's dozens that don't get filled. I mean, it's like, you know, it's not a thing that the market wants to do. So because we went up, the market doesn't want to come down. That's what my kind of thing I'm trying to get to right there. But great question. It doesn't increase the chance that we move back down. As a matter of fact, it increases no chance. The market just found a new liquid spot, and whether it wants to go back or not will depend on new conditions in the market that start today. So I have to look at it. All right, news today. Pre-market, ton of stuff came out. We'll talk about these in a little bit. This is important for the inflation understanding. Initial jobless claims. Continuing jobless claims. Core retail sales. And tomorrow, the housing, wait, hold on, was housing, wait, today is Thursday. So tomorrow we have housing starts. Retail sales. Retail sales year over year. No news today, which is good. Market opens in 15 minutes. You can find out your juice pre-market. News you need to know. FDA bans red food dye number 3. So your fruit by the foots will no longer be a bright cherry red color. In turn, you won't get cancer. So I don't know if the trail was worth it. The red color was so cool looking. Other than that, I made a joke yesterday on Twitter that I was going to put in a bid to buy TikTok myself so I can ban it. So, I mean, I don't know. I feel like that's the proper way to go. I might save a generation or two of humans if I were to buy TikTok just to ban it. So, I don't know. I turn it to, you know, company that sells digital clocks or something. Oh, I don't like TikTok. All that amazing day trading alpha that you get from TikTok. Are you kidding? 8-year-olds telling you where to buy Tesla puts. Hey, bro, buy Tesla puts. I'm totally a millionaire with a Lambo. Yo, bro. So anyways, we'll see if I can outbid Mr. Beast. I don't know. He's kind of rich. All right, let's see the nothing going on today. Nothing crazy. All right, so let me look at the quickly. This is something that's interesting to you as a day trader. You know, you want to see Big Daddy VVIX down below 100. The market's not going to be its usual chop, chop, chop self. Below 100 tends to get back to either trending down or trending up a little bit cleaner. Usually trending on the upside. VIX is below key level 1637. That's great for us. Again, nice, clean market. So this is part of the greater market analysis. Like to see that. It's good. Good stuff. Oh, it's the best trading community in the world. Baby, that makes me feel good. I like hearing that. You guys make it happen. Okay. News you need to know. Besides red dye number 3 being canceled by the FDA, just got a year or 2 on it. You know, the pharmaceutical industry stopped using it in pills a long time ago because it causes cancer. But if you didn't know, candy corns, America's least favorite candy, is the orange is colored with red number 3. Believe it or not. Who eats candy corns anyway? Blech. Those are candies given to you by like your great grandparents and people that hate you. So yeah, that's cool. Nothing else really crazy going on out in the news here. But January 19th is TikTok ban. January 20th, new president. Get used to Trump's Twitter feed as one of your main sources of news and market simulation. Markets tend to go really all over the place. Trump will say something and not say something and go back and forth a lot, and it gets crazy. So Biden era trading was very forgiving. And Biden was a very benign president when it came to his Twitter account causing market turmoil. Trump was like a weekly thing. So if you never traded in Trump era fully, you got to kind of have it on the sidelines, you know, make sure it's always open so he's not out there, you know, threatening some country with a tariff or something. The market goes for the afternoon and then right back up. Happens. So that's a good little rule of thumb if you guys haven't experienced Donald Trump's stock market. It tends to be mostly bullish, but you know, see. Okay, going forward, continuing jobs claims did not peak above 1.9, actually ticking down a little bit, which is good. 1.9 million is an average over the years. It's not something that is out of bounds or even crazy. We've had much higher in 2010 after the last financial crisis. Matter of fact, leading up into 2020, about 1.6 million. We're seeing about 1.9 million. With continuing jobless claims of people that were let go from their job for non-performance related reasons, just like laid off, and they were able to qualify for unemployment, and they filed for unemployment. And there are 2 different things on this one. Initial jobless claims is the first week that you qualify. And typically qualify for unemployment, it doesn't last forever. There's a deadline on it. I think it's 3 months or 6 months. You have to reapply. But the first jobless claims, first week that you qualify is this one right here. And this is a weekly data point every Thursday. This helps you understand inflation and wage growth and stuff like that. Inside of here, it's just kind of noisy. You don't see a bunch of layoffs really. 200,000 is practically normal. That is within the range of noise. You can see right here, this is pretty much what it is, 300,000 in the last rally. You know, this is not out of bounds. If there's layoffs like you would see in COVID, you would see big spikes of people getting laid off. Layoffs in 2009, you saw it went up to like 400,000, 500,000, 600,000 people a week. So that was really abnormal, elevated. And of course, in the bull market leading up in the 90s, it was like 300,000 people getting laid off a week. So this is relatively low. This is a strong market we have. Companies aren't letting go. Jolts are also going up, which means companies are creating jobs they want to fill within 30 days. The job market's nice, clean, and healthy. So I don't know what the whole stink is about, you know, the market being a little sensitive to inflation. Not really that bad. So anyways, continuing jobs claims are good. Initial jobs claims are good. Jolts are growing. Economy's growing and not getting worse, which is good. Month-over-month core retail sales is growing. Inflation's not hitting that hard on the pocketbook at home. As a matter of fact, this last tick in January was the highest it's been in 3 months. So we'll see. Well, looks like that failed. All right, retail sales year over year, still good. The times that retail sales do go down, obviously periods of high unemployment, people don't spend a lot of money during COVID or can't leave their house. So, but in the world of, Amazon and such, this doesn't go back for 2020. People tend to not have a lot of interruption in their spending just because they can't leave the house because of Amazon and stuff. But you could see that, these numbers are ticking up. So, I mean, I don't see any bad signs the economy is any kind of immediate doom or barrel. It looks pretty good to me, but what do I know? I'm just some dude on the internet. Good morning, all you peeps. Gotta get a what's up in chat. Hello, good morning. Everyone click that like button, bottom right of your screen. About to make some money today. Let's see if we get, I hate when we open up so close to DD band though. It's like the trade I want to get takes place while I'm sleeping. That was the trade I want to get. Boo-hoo. And we'll see what we get for the new morning. We start in 9 minutes. Hang tight for a second. Trying to get all my stuff situated here. Boom, 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 boom. All right. Coffee armed, ready to go. You made money for the first time overnight. You took that super easy play. I was listening to all you guys everyone in Discord was like yelling around here. Y'all all made a trade, and some people messaged, "Did you take that trade?" I was like, "Oh no, we fell asleep super early last night." You took your shopping cart back yesterday. That's what I'm saying. See? And the one time you realize that you're doomed in your trading discipline is when you walk outside and you go, it's raining. You know what? I'll just leave it here for now. I just got to get to my car. It's raining. See, in a real nod to discipline, mildly inconvenience yourself to just do the thing that you need to do. And that's when you have the power. You're like, man, I did it. I'm proud of myself. So then, you teach yourself discipline that way. Some people just don't have discipline in general. That's why we do the whole shopping cart thing in our classes, in our community. We teach people that if you want to change in your trading, start somewhere. Maybe start somewhere that's not trading. Read a book. I got 2 recommendations for you. You want to change your life, change your trading mindset, change some things, do 2 things. Number 1, go read the book called Outliers by Malcolm Gladwell. It's nothing to do with trading, but go read it. That book will open your mind to a process of what talented, exceptional people who are great at what they do, what they have versus what you don't have. A lot of people in the snowflake world we live in, everybody thinks they're a moment's notice away from greatness. They're like, I'm so good at what I do, I'm almost there. People forget that in the time of for the internet, there was a skill gap, and people that were great at something were really great at something, and you would just admire them from a distance and be like, wow, I can never be like them. But everybody right now thinks, oh, I can be like that person. I'm great too. And that's a book that slaps you in the face and tells you you're not great. It tells you what great people do. And after you read it, you go, wow, I don't put in this much time into my craft like masters do. No wonder I'm not that good. And if you have an open mind, it teaches you that you are really far from your goals, and it inspires you to work hard, which I love that book. My mentor at my engineering job, when I worked at Dow Chemical, gave me that book first day on the job, told me to read it. Nothing to do with engineering, but it really is a slap to your ego. You have to put in 10,000 hours of practice to be a master of your craft. Some people put in a month of trading and they already started a Discord room. How about that, right? But anyways, that's a good book. Help you get started with your thought process of where you are in your journey. Another thing is return your shopping cart every single time. Where it goes. Without fail, through the rain, snow, lightning, tsunamis, wildfires in LA, fight the elements, doesn't matter. Take it back every time with no excuse, because you need to teach yourself in trading to do your techniques every single time the same way, with no excuse, with no bending the rules, with no temporary laziness or convenience. Just skirt them. Do what you need the book. Yeah. That's the book. It's a good book. Basically shows what the statistics and the numbers of what makes somebody exceptional at their craft. You know what I mean? It's really good. I have a copy somewhere. You can borrow it if you want. No, go get. Just kidding. Go get it from Amazon. How to Influence People by Dale Carnegie. That's a must read too. That's definitely a good book. Definitely a good book. All right. So today, market's doing really well. Bull market is back all through greater market signals. We're bullish yesterday, which is great. We're going to load up the market today. Hopefully our DD band is good. DD ratio is good. Here's some rules here. Outside of these bands, I long only. I don't do any shorts. 88% of days tend to close inside of the bands. 4% of days close above the upper band. And 8% of days close below the lower band. Why is my pencil tool not putting everything that I'm doing? I probably need to reboot my computer here. This is an 8, I promise. The world's weirdest looking 8. It's got like 4 humps in it. All right. Don't forget to hit that like button, everybody. Bottom right. Let's go. The world's most beautiful 8. I'm disappointed in my 8. Right here. These are the stats. 90% of days close above MHP. The most probable path of today's trading ends somewhere inside of here. If the market dips and tries to find support, DD band lower is always a long entry for me. When this ratio is greater than half, I always hit it hard in futures. When that ratio is less than half, I hit it small. It was upwards towards the 90s yesterday, and we're gapping up. There's no way it's going to be less than half. So today, if the market does, for whatever reason, collapse out, this is a long entry to back in on to close somewhere back in here. You can see that the equilibrium is kind of pushing price this way. We're in that upper edge, which I hate starting the day up there because that's kind of where I usually like to exit a trade. This is one of my favorite trades to take when your hedge pressures to DD bands. Favorite trades to take. It already took place while I was sleeping. So we'll see if we get in the morning. S&P futures will do something very similar. Market opens in 3 minutes. S&P has a little bit more room to go, which I like. NASDAQ, they make it all the way. Same stats are there at the S&P. It's actually where the stats came from. 88% of days closing right in the middle. 4% of days closing above. 8% of days closing below. 90% of days holding MHP, as some of the people are saying today. A lot of our folks love that MHP is one of their favorite pivots on the planet. How do I know? Wait, hold on. What's the probability of the new hedge pressure line ending above 80%, Lee? So we stopped doing backtesting on that because it hit 80 and it kept going. And it was still 80, 80, 80, 80. And it was like, okay, that's roughly what it was equivalent to be, 80. The case study proved that it was going to be closer to 80. In practice, after a couple months of data, it showed to be 80, so we stuck at 80. Now, the real-time backtesting module, I'm having a meeting with my team today to bring up the real-time backtesting and printing these stats on the chart, automated for you guys with the algo. That's the next big push of Rocket Scooter. Jose asked a question. Is your Rocket Scooter desktop app or am I on a browser? Look like its own desktop app. Aha, JS. So in Microsoft Edge, here's a little trick. You can take any website and turn it into an app. If you go into your settings on the right side of Microsoft Edge, you can go down and there's something that says like create app or something. And you can create an app with an icon and put it on your desktop with Windows 11. With Windows 10, there's a trick to do it. And by creating a shortcut, it also makes it an app. But yes, I do that to get rid of the browser URL bar at the top and all the browser history. So, you know, you guys don't need to see that I use Edge to look at all my naughty stuff. Yeah, so you can create an app and put it down your taskbar. Ready to go. Might even has a little blue rocket scooter icon. Jose says, how do I know? Is this part of the tools you offer? Oh, the backtesting. So members in our group, Jose, members in our group do backtesting. So essentially, like we had groups of people just kind of like step up and say, hey, I'm going to run some backtesting numbers for you. And they put together their own independent case study and backtest. And so inside the group, people share the results with each other. So it's not just like, this is a Matt says it goes, and then let's just trust him kind of thing. That the actual 88%, 90%, 80%, we're actually group run backtest, or the 80%, the one that I did on hedge pressure recently. We remodeled it and reformulated it for a more rigorous portions of the model were more rigorous for Tuesday and Thursday options when those were created. Long story short, I created the spreadsheet for the backtest and I shared it with the entire community so they can see the results live. So part of what we do is share with everyone, which is what I love. All right, let's see what we got starting out the door. Oh, res is negative. Okay, guys, so let's be careful here. Negative resilience is a gap fill, so be careful. Res is negative. We are down here. Oh, we are below. Oh, wow. Okay, so this is an interesting setup. That's perfect. Hedge pressure long on the tap is way to go. Resilience, okay, resilience now positive. Okay. Interesting for S&P futures. Take a look. All right, so we're kind of trapped in between hedge pressures. Anything at MHP, this is a tricky one. Here, here, here. This resilience number is less than 0. We push from here to here. NASDAQ is positive right now. S&P is positive. R less greater than 0 here. Okay, so today it's a dip and rally, which is good. I want to see that. Okay. Anything from here is a breakout. However, we're into that 4% range where we don't break out of those DD bands that often. So what I'm looking for is a dip to buy 518.5, which is roughly 10 points lower than this, about 59.90, 59.84, give or take on the low side. Take a look at NASDAQ. NASDAQ slightly pulling back a little bit. QQQ. All right, dip and rip. Let's cross our fingers, see what NASDAQ's giving us today. BLD in the same light. NASDAQ does interact with monthly hedge pressure here. With NASDAQ being the one that's pulling down, resilience can predict hedge pressure breaks sometimes. Monthly hedge pressure is stronger than resilience, though. So the chances is that there's a standstill right here. It's going to want to bounce from here to here. I probably would X out a trade. I might grab that dip and X out while it V's back up. This is the 1A trade on a BLD. Other than that, a negative res likely can yank this down, and be very careful because monthly hedge break is devastating to the market. So I'm going to hit it with a medium-sized position right at MHP, right on that little dip there. Let's see what we get. Let's see if we get now. Holding it small on this one, I have consideration that we have negative res might tick me out, so we'll see. Just gonna trade this one slightly small here. So we'll check where futures are. Let me put this right here. Don't forget to hit that like button, everybody. Ooh, ooh, ooh. Oh, NASDAQ is liking to sell. I hate how the bot just like posts everything all at once. I need to fix that whenever I'm able to pay attention right now. All right, let's see. Again, if I lose this one, not a big deal. I do want to take the lower dip trades. I just tossed one at it, so I'm not out there like squeezing anything big. Breaking MHP could be bad, so be very careful here. Once we fill the gap, we're going to see what happens here. Let it fill the gap. I'll tap it one more time. The risk on this one is about 1,200, give or take. I'm going to hit it with one more contract right here just to trade it back up to see. Now, breaking MHP, we don't bounce on hedge pressure, so be very careful on this one today. If it does falls out pretty good. Let me let this hit one more time. Right there on the edge. That's ES. Let's get in Q. Let's Go NASDAQ. Let's hit that MHP and rally. Ooh, ooh, ooh. Y'all like my singing? Come on. Just waiting. Let's see if it holds. Double outs will confirm and hit it slightly higher. But the problem I don't like is that we hit those DD bands overnight, which is what like my least favorite thing on this. Hockey song. So let's pray that we don't break MHP. Come on, let's go. Let's go, NASDAQ. Let's go somewhere good. Fill that gap, baby. Open, orange, open, right to there. There's no news today, so I think that the hedge pressure is going to carry it. We shall see, though. We'll see. Fingers crossed. Just one. Let it push. This is about a 60-point move in Nasdaq. It's going to right up to about 21,500 if it does go. Now, I don't like that we've already tapped the bands in the overnight. So what I'm going to do today is I'm going to trade it just back to here. That's it. And then let the volatility play out, then take a break and then see what it does and then move from there. Fingers are crossed on this one. So I'd like to see, let me get a green. Green is easier to see. It's going to be a tough one, but I think I'm good. I think everything does look good. I wish that the resilience numbers were better. I wish that this wasn't so nasty as some of the stocks are selling off, but I think I'll get a good trade on this one. Let's pop it with another one on the support. I'll take a little bit more risk on this. 60 points on 2 is, again, the risk and reward is going to be a little bigger because I'm going to hit it a second time. And that's it. But I'm worried that this is going to go down because we are losing some of the stocks in the NASDAQ. So this is roughly 4,000 if I'm right. About 1,500 if I'm wrong. Boy, Nasdaq resilience is the one that's giving me pain. Hurting me today. You're going to watch the first test of MHP right here. This is the key level that we're testing right now. We need to break through here, get some love. I'm going to kind of fingers crossed on this one. Let's go. Stop trying to drop. It's picking up a lot of selling pressure, though. That's what I don't like. Nasdaq is definitely snapping down and trying to track the stocks inside of it. Resilience negative 30 is kind of the resistance to upward movement. And I'd like to see it get better. So we'll check SPY really quick. See what SPY is doing. Keeps popping green. SPY res is positive, which is good. So SPY does definitely want to go up to fill its gap. Let's go. Come on, NASDAQ. Base hits today. Let's get that movement. Oh, that's so clean. Oh, that's so clean. What's up, guys? Don't forget to smash that like button bottom right if you haven't done it yet. I don't like that it's not picking up much momentum from here. So we need to go back up and fill the gap right at the top. 600, 700. Come on. I might proxy close out if S&P taps here because Nasdaq is trying to track its stocks. So we need to see an upprint on Nasdaq here. Good lordy. Come on. Hit that 1,000 mark. Let's go. I got this in all of my accounts right now, so we're good. All right, cool. Perfect. Nasdaq. Let's go. Let's roll. Let's roll. Let's roll. Proxy trade S&P. S&P hit the gap fill. Nasdaq, let's close. I'll take it. Let me start putting some of that in my pocket. 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 in my pocket, in my pocket. Let's go. Let's close everything out right on. Oh, ooh. Just the base hits. I mean, I don't need a big trade on this one. I don't. Hold on 1 second. Oh, oops. Wait, wrong button. Sorry. Wrong button there. Sorry about that, y'all. What the hell? That's good. All right. Let's wait on this one. I don't like negative resilience on NAS. Hold on. Across the board, that's this. I just did in like half the accounts. 1, 2, 3, 4, 5, 56, 66. I don't know, 76, 8,000. All right, let's wait for the next one. Hold on. Hold on, don't go anywhere. See, I'm going to tell you something about discipline. When I used to be the leader of the Cobra Kai dojo, and I'm not lying, this is a real thing I used to do. I used to teach karate to a bunch of, lost kids. And we learned something in the Cobra Kai dojo about discipline, okay? See, without discipline, we used to teach, mercy is for the weak, enemy deserves no mercy. Remember my, the original speech. But instead, we teach discipline is the way to go. It doesn't take much to put, $9,000 in my pocket. Proxy trade on a gap fill. And most people think that you have to go out there and put in, 800, 900 points move in the NASDAQ to go ahead and make your house payment and stuff. That's my mortgage right there. 10 minutes of work. It's all about waiting, returning your shop cart, waiting for the trade that you want. And that's the way to do it. So in general, I'll review my trade really quick, and it doesn't need to be much. Here's all the things I need to tell you. Now, again, there's some more opportunities here, but the NASDAQ stocks are pulling back. I don't think we're going to get a nice big rally today just yet. Here's the rule. Every single day, if you load up the Rocket Scooter platform in futures and you have a futures account connected, it'll print these green lines on your chart. If you don't have that, you're going to go right down to this table, and it's going to give you those green lines right there. Now, when you do that, you're going to walk over here and see overnight, did you touch either band? Your best trading day answer is no, you didn't. Okay, you didn't touch either band. All right. So if you didn't touch either band, it's good. Your usual trade is from one place to the next band. Once you've already completed that move, though, the market's kind of tested what you wanted to test. So then it's like, okay, don't consider it. Instead, I'm going to trade other pivots. Usually you don't have magic strike twice. I'm out of the fucking way because I'm so good at this. All right, so listen. The best to ever do it on YouTube. Not in life. There's tons of great people better than me, millions of people, but on YouTube. Anyways, I digress. If you've touched either band, that trade is usually off the table. Don't ever bet that things happen twice. So what I do is I come here and go straight to my liquidity maps. I use SPY. First of all, I have S&P pivots and NASDAQ pivots. The rules are 90% of days will stay on the same side of MHP that you open on in Globex. So that is support. 88% of days close down in here, which is why when you touch that band, you're kind of like, ugh, man, I already tapped it. It's already kind of done what it needed to do. Usually one of the best exit targets is that band itself. So 88% is inside of the band. These are actual backtest numbers. 4% of days close outside, 8% of days close outside below. As you see, this market, because these are actual stats, it's no lie to you that we are like right inside of this range because that's the probabilities. Pretty cool, right? So, I don't trade from the middle that often, which today was a trade from the middle. It's not that good of a trade. I'd like to trade from the edge to the middle more often than not, but I do have a scalp inside of here known as the resilience scalp, which is what I took today. Now, I had NASDAQ on my screen while I was looking at SPY. I tend to look at both indices while I trade one or trade the other. SPY usually is the horse that draws the cart. And that white number that I just boxed on my screen is actually a gap fill predictor that says, are we moving from this box edge to that one or this one to that one. As you see, all morning, resilience was positive on SPY, but negative in NASDAQ, which is my caution of only hitting 2 contracts and then getting out of the way. The gap fill move is very common when S&P resilience is positive. We gapped up, we tested the half gap. This white line is the tiebreaker at the stash line. From here to here was just the trade. That was enough for $8,000. Now the direction, I'm a little scared because we already had that sign I was complaining about NASDAQ all day long. So now you see, because NASDAQ was going against the trend, I had one lack of piece of confluence, so I traded it small. Instead of hitting it with 4 or 5 contracts, I hit it with 2. Right? All right, I can't fucking see with these glasses on. Show's over. Get back to your shanties. Get out of here. Show's over. Go home. I can't see. Volatility increasing, yeah. So do y'all see what I did? It doesn't take much, but the resilience scalp is one of our textbook setups here. And I got out of the way because, and I did hit it with NASDAQ and some of the accounts in S&P and some of the others, but it's 8,000 in the PA, so that's good, right? That's more payout, so. All right, let's take a look at VIX today. Now, what are we going to do now if the market's likely pulling back? Let's take a look at some of this stuff, right? Let me do my f.us.es. That is so weird because it did that to me yesterday. I don't know. Okay, so what do I do here when liquidity map's showing downward moves, right? And don't forget, guys, hit the like button bottom right if you like what you see. You're watching somebody that trades with roughly a 70 to 80% win rate. It's very rare to see that, and it's not made up because everybody here watches it. You can go to my Twitter and look at some of my bookmarked tweets of the contests I did where I just won a trading contest with an 80% win rate as well. Over 1,500 trades. Not always that good, but it's always greater than 60%. I don't lose a lot, but I don't trade a lot either. And that's the secret at Rocket Scooter is that we teach you 3 major techniques. Number 1, we teach you how to find volume, which is high volume pivot. This is one of them. Now my question here is, do I take the long on NASDAQ right there? S&P, this is usually a pivot back up. However, with all the resiliences pulling back, I don't have any desire to trade. Now, the bounce from hedge pressure right now only goes to half gap. If it does bounce, any scalp from here to here, I would close out with negative res less than 0 because it pivots from there. Okay. So best case scenario on a bounce of 92.5, which I probably am not going to take because the market's deteriorating right now. So what I want to see happen today is if the market does try to sell off or crash out, we're going to look for some of our red line techniques to long on. Now, remember, 90% of days will close above this orange. We're likely to get a bounce here. There's a second scalp I'm contemplating. Should I play it? I'm like, maybe I should play it. Maybe I should tap it with some micros. Confidence is low. Position size is low. The thing is that it only goes from here to here. So I'm like, I don't know. That's roughly 40 points in the NASDAQ, a 40-point pivot. So it's usually going to hold. I'm not against it. So that is, I think right now, the lack of push in the stocks. This is a stock gap fill predictor. I mean, the index gap fill predictor based on the stocks. When that resilience line is negative, it's not good. It's definitely not that good. So I'm not going to do anything yet. It's resistance from the half gap right there. Now, I don't expect this market to go super bearish today. But let's analyze the greater market today. We have 3 signals that'll tell you which kind of market that we're in. Greater market right here. It's great. One of them is an understanding of the stocks. If you're trading NASDAQ futures, S&P futures, got to understand the stocks. This ratio, top left, the Rocket Scooter platform, is a bull bias indicator. So 79% of the market cap of the S&P is in a bull zone. Think bullish. So DD greater than half, we are bullish on that note. Okay, 1 up arrow. Number 2, SPY is below its monthly hedge pressure. So this is the stocks now, all risk in the stocks. This is the SPY's monthly hedging, monthly gamma exposure to market makers on SPY for the month. And this month expires on Friday. So on third Friday of the month. Is it this? Did they move this expiration out to next week for equities, or is it still this Friday? The overnight MHP is also based on options, yeah. Yo, what up, Blake? What's up, my dude? It's been a while. You don't do VWAP? I mean, if there's an indicator to use, VWAP is like the only good one that exists. So don't think I'm a hater all the way through. VWAP is probably the best indicator of the indicator suite of what's out there. It's been a while, man. You know, I kind of like these. I've been kind of jonesing for the glory days of FinTwit, like 2022 era of FinTwit spaces. Used to be such a different flavor than Twitter now, but we used to have so much fun in the early Twitter days of Twitter spaces. All of us. Blake was there. I was there. The old school dudes, the FinTwit after hours. God, you know what I mean? Where is the time gone? Sitting around the fireplace like an old man. Yo, remember the stories of the old FinTwit after hours? The crazy dramatic witch hunts. Oh, they were so much fun. Okay. Very much miss all those days. Okay, monthly maps on S&P. We're going to look at, so basically this is the now in stocks. We're tracking the stocks with the index. So I do think it's probably going to try to take a pop there. But with the deterioration of SPY resilience right now, we're not breaking out to highs without a healing on that. So I'd say there's a pivot from here to here. I'm just too much of a wuss to take it. So back to greater market. It's three indicators going to help you see what the overall market's doing. Number one, DD greater than half is the market cap. It's the bias of all the stocks in the S&P, 500 stocks or 500 companies, 505 tickers. So 82% of them are in a bull zone now. So that's the now. SPY less than MHP, that's about the monthly outlook on SPY. Leading into monthly expiration on equities, SPY still has a little bit of downward pressure. It's still fighting off that. So that's actually a downward tick. So the last thing is monthly maps, and that's going to predict 3 months out. And monthly maps use the landscape of options to get a look on what's going on in the S&P. Now, you might say, why is this guy saying options a lot, right? Well, the trick is what we do is all the trades you see me make, I get pivots that I get from the options. Like most of these are actually calculated from options. So this is calculated from options. This is calculated from options. And I trade S&P and NASDAQ futures off of that indicator and options. You don't have to know anything about options, though, if you're using Rocket Scooter. The pivots just predict where volume is going to be. And every time you touch monthly hedge pressure, as I tell people, without fail, 100% of the time, it is a volume spike. When you touch hedge pressure, 100% of the time, it is volume spike. Because it's maximized delta hedging and market makers, and we're the ones that figured out how to do that. Despite the goofy bandana, I'm an accomplished mathematician and programmer with an engineering degree. I'm a professional nerd. The glasses didn't give it away. So came up with a very sophisticated technique to understand the risk in the market based on positions. Options tell you everything you need to know. The S&P, ladies and gentlemen, is bullish through March. Well, market's back. I said this yesterday. Now, while today we have a current down-ish pressure, I kid you not, this is the most bullish we have seen the monthly maps in ages. This is a tool you can do on any stock, anything that has options. So I'm going to draw 2 lines right here. I'm going to pull out the tool and show you. Ladies and gentlemen, the bull market's back through March. We're back to rallying very soon, as a matter of fact, if not today. Now, I need to find a good entry. As I'm watching this market try to sell, I'm still kind of on the fence of like, do I want to trade it or not? So I'm like debating myself. I should do it. So where we are, I personally would like to see this market test lows and continue to go. But I think from here, it's going to try to rally. I think that the market's not going to sell off and fade this gap. That's for sure. But here's a trick that monthly maps will let you see 3 months into the future of what the risk looks like. So options have expiration dates. And what we do is we map it out so you can see what the expiration looks like. A month out, right? So let me show you something cool, guys. We give you a little cartoon cheat sheet to read this, and it's going to tell you one key thing to take away with you. I'm in no trades right now. Nothing right now. So here, let's zoom in. You ask yourself, is 592 bullish or bearish? Is it too high or too low? Well, right now, if you see these dark gray boxes underneath price as time goes by like this, then that means you're in a bull territory. So 592 is actually a low going forward. It's not a high, it's a low. If 592 was a high, you would be in bear territory. So right now, we're sitting in bull territory in options. Now, without explaining fully what that is, this is a bull market. So the greater market, we're below monthly hedge pressure. So one thing is bearish, but monthly maps is certainly bullish. And this ratio is bullish. So 2 of the 3 things are bullish. And when only 1 of the 3 things are bullish, I'm a bull. So with 2 of them bullish, I'm definitely still a bull. It takes all 3 to be bearish for me to be a bear. So as of yesterday, or 2 days ago, we said bull market's coming back. Yesterday, we said bull market's back. And now we're saying bull market's back. So whatever's selling we get today, I'm hoping to find a really nice, good dip to take a long off of. As everybody think it's selling off. I could see 3 months in the future, I think we're going to be rallying over the next couple of months. So when the bottom of the bull zone is sloping down, like it is right here, it means the bulls are actually longing more. There's more and more options in the money, and therefore there's more accumulation to the long side. Think about it like this. Think about it as being calls in the money. The more calls that are in the money, the more forced buying you have at any place underneath it. So as the market falls and these calls are in the money, people have to long that sold those calls. So the sloping is showing you that bulls are getting stronger, and on the downside, bears are getting weaker. So this is a short squeeze. The S&P and NASDAQ right now is basing out for a rally leading into after next week. At minimum, that could even start today. I'm not saying that we're gonna rally and break highs. I say that we're going to probably do this, and don't quote me on this, but at least test highs. The market might try one more time to be stupid, and then by March, we're breaking highs and going. Whatever this was this month, the options don't lie. This is not something we make up. This is just reading what is in the landscape. So it's good to see. I love when the bull market's back. Makes me happy. Now, let's take a look at some other things. Volatility, right? Whenever the space between it gets bigger, your volatility is increasing. So volatility is definitely increasing again over the next couple of weeks. The president coming in, who knows what's going to happen. And so while we are not bearish, we're still volatile. So the market's likely to have a few more waves before it breaks out. It goes all the way until February when that volatility starts to dissipate. And then in February, there's a little bit of selling pressure. When the bull side slopes up, there's a selling pressure on the market. And then we are back to bullish in March. So again, it takes a little bit to like go through the class, learn how to read this, but I'm going to translate that to S&P. Okay, ready? I'm going to draw on the chart what S&P is likely to look like if just the options are take over and there's no catalyst. The S&P, nice little clean bull run right up here to test the highs, likely consolidate again, likely sell in that selling pressure again one more time, and then likely right here at March, we're back to rallying. I'm going to take a picture of that, post it somewhere. That way in 2 months I could say, nailed it. Little picture here. So monthly map is a great way to see a plan like 3 months out, because that's where the options are structured. And every day we get a new read on that. So it's pretty good. What do y'all think about my little prediction here? Am I wrong? Am I right? What do y'all think? The tool is based on just based on data. That's correct. All right. Sensei mode is over. Options have one really neat thing about them, right? So you sell an option, it goes in the money, somebody's got to buy some shares. That's basically the takeaway when it comes to options. So we use that to look for, well, if people have to buy shares, then there's going to be volume there. And so all these pivots are basically people have to buy shares is what that means. So this is this market pullback today. Looking good, looking solid. Okay, so I'm glad I'm not in a trade, not doing anything, just waiting. So a good setup today. On liquidity map and SPY, there's nothing on futures right here. I'm losing MHP, so we're going to look for some downside move in futures. Let me pull up my red lines and we can talk about that really quick. Let's look for some targets. Like I said, no trades today, you guys. Not for me. Oh, not yet. I've already made my trade. I'm done. 21,230 is a tap today. So these are my pivots I'm looking for. I'm going to write this down. 21,230. This is another technique. Illiquidity pivots. You have MHP break. We look for those to be pivots to trade on. 21,230. Watch this. This is worth a sub if I get it right. If I get this right, sub to the platform and you can learn this trick. If I get it right, you're going to want to learn how to do this one. This is one of the favorites. S&P. Watch this one. 59.50. Just wait. 75. That's enough. Okay. So right now the market's in a really interesting spot. The stocks that gapped up are being sold very hard right now. And so when you lose these hedge pressures, market can be pretty nasty. As you see, the map is pointing downward. And where do you go? There's no, we don't have any pivots down here, no support, so I got nothing to do here but to wait for my next big pivot. Hedge pressure breaks create irrationality in the market. You'll see this, we taught you, these lights will turn red to let you know hedge pressure's broken, be careful. So no bag holding in this environment. We have a rule that if you break through MHP, this probability is not as high as 80%, so I don't usually take that return bounce there. But if we break through here, it's a fall, like wherever it ends up being. If you break through here, it's a fall to there, and then that's the pivot that grows for the rest of the day. This is the trade I want. I want to see this flush out. I don't want to scalp inside of this tiny little zone right here. I want to see the market try to flush. With the stocks selling as hard as they are, it's possible. I'm going to let it churn around. But the market's not crashing, as we already determined. I'd like to see it scare a bunch of bulls out. Don't buy the dip. Hey, if I hit my target, you guys got a sub. That's the rule. Free yearly subscription would be great. We have contests all the time for like free subs and stuff. At minimum, you guys got to come to the class. Classes are $1 a day. We teach you this stuff for $1 a day. That's it. Super cheap. It's like the cheapest class, period. U.S. business. Oh, thank you, St. M's. U.S. business story came in expected at 9 a.m. candle. Good deal. So dip today would be good buy. For me, yeah, that's what I want because I'm looking at, again, I can't give you guys investment advice. Don't do any decisions based on what I'm doing. There's a delay on the stream for a reason. For, that way people can't copy what you do exactly, for legal purposes. Don't make investment decisions based on what some random dude in a flannel shirt on the internet tells you. For me, I think the market bases out somewhere today and rallies going to the rest of the week. Some single stocks. Yeah, so you guys want to see something cool. Let me show you some stocks. So everyone give me your favorite stock tickers. While we're waiting for this to play out, I'll show you some cool stuff in stocks, right? It's like 10 seconds delay, something like that. Like if you guys wanted me to show you how we use options to predict volume, we get ahead of VWAP and get ahead of volume profile. It's like it's a whole brand new type of indicator. We are a day ahead of VWAP and a day ahead of volume profile. Like I could put in something, right, Tesla? Imagine finding high volume spikes and pivots before market opens. Or before trading happens. When the market opens, we print this out. And there is your high volume support on Tesla if there is one. You can see right here, there's pressure pushing it higher. And as we're sitting here, do you see that bounce, right? So I know that if Tesla's like falling, I'm not doing anything until I get to my high volume pivot. And then there's a little flow cheat sheet that shows you where the flow is going. All right. I like to play this game, right? You guys give me like a dozen tickers. I'll show you how we predict volume. It doesn't mean that it has to follow the flow. It doesn't mean it has to do that at all. It just means the flow is pushing this way. Now, the selling could overwhelm that, but it's letting you know that this is an important thing that you need to know is happening under the hood. There's more longing than shorting here to balance all that options risk of market makers. So you can see that the market is trying to push from there. And as a trader, that's what I need to see, right? I need to see where the underlying framework is going before I make a decision, because the humans are doing random stuff on top of that. GameStop is in what's called a liquidity pocket. It's kind of just holding in the middle. Not bullish, not bearish, stuck in the middle, stuck in the middle. Like that. Okay, Eli Lilly, let's go. Sometimes there's not enough data to really give a good map. This one doesn't have one, so you can't really do that one today. Can I do gold? Yeah, so with gold, you can do ETF like GLD. You guys like that? I like GLD. So gold today has flow from here to there. And if it supports above here, it pushes to some next resistance. We'll have to go find that on the chart somewhere. But as you see, gold, the break point is this orange line. Anything below this orange line, I'm not long. Right? There's volatility there. So this is the framework without using technical analysis. I'm just aligning myself with the flow from the options. Right? Pretty cool, right? DJT. It works for everything. It looks like we don't have a map for that one. So sometimes there's not enough data to really give a good map. So that one today didn't have one, or it's not on our list, but we'll add it to the list. We're making a dynamic ticker list right now. You guys were asking about like MSTR and other tickers. Our project we're working on now is to create a dynamic ticker list that adds more tickers. Like as you guys type them in, it adds them to the list of things to pull. So we're about to expand our ticker library massively. So here, there's really no pressure either way. But when you do touch this bottom of this bull zone, there is volume. So no pivots on this one yet, except for this bull zone. This is likely to support there more often than it doesn't. But we'll see. Oxy. See, there's that push that I showed you guys that I was too scared to take, but here to here, trying. Honestly, I don't think market's going to crash today. I'd like to see it sell harder so I can get a better dip, but it's definitely not selling easily, right? If I got a hook from there to there, I'd be closing out as well if I got that scalp. Oxy, there's your monthly hedge pressure. There's the volume and the pressure off of it. See, this little code, this little black dot right here means the open price. Open usually bounces on blue and taps open. So this is like, actually we open below. So this is interesting because this is actually breaking out from here. But there's your pivot. You can see there's a volume pivot right here. TXN. It's fun, right? Okay, so this is an example of map of a gamma squeeze or an event that's happening. TXN should have found some support there, and the fact that it is breaking is bad. So if I were like trying to long something that flips to the other side, I know that it's going to go against me really bad. So I use these to like know when the extent of my long or short trade is likely wrong. TXN, like I would be like, okay, if I was long in this, I'm bag holding now. I need to get out of the way. I'll want to long if we're back above here, yeah. But if I were to long and it breaks, I get out. Does that make sense? So if the flow gets overwhelmed by selling, then you know something's changing, and that's really kind of the trick to all of this. Can I see Dogecoin? Nope. We don't have cryptos in here. How can you have a bias on monthly maps when it changes every day? Because it doesn't change much every day. In transitional market, it changes a little bit every day. But because far out in time doesn't change that often, you may notice like once it's stabilized into like a bull or bear market, it stays that way. what we've seen over the last 3 or 4 days, if I were to play this like a slideshow, you see that NASDAQ yesterday used to have like some big fat bear zones like that lasted for a week. Remember? It was more like that. And then as of today, it's kind of like less bear zone above it, right? So it's whittling away as people are kind of exiting their bear positions. So the changes are small. From yesterday to today, it was like this, right? And yeah, these things will shift around a little bit, but you're not looking at the exact levels. What you're looking at is the shape and the inflection points, okay? So you can see clearly like sloping down, sloping up, sloping down. So now, from now, I have an estimate, right? Till the end of January, it's bullish, and then there's a little bit of selling pressure until February, and then buying pressure again. So I say, the market's still got waves up. If this thing was just straight down, it'd be a straight bull market. Does that make sense? Because the market changes on a day-to-day basis, but the monthly maps will tell you Wall Street's real feelings of the market. Market is selling today, right? You're trying to sell today. And the first thing you and I said was, oh my God, the bull market's back, right? Didn't we all say that? And how many Fibra gurus, let's go check on Twitter. How many Fibra gurus out there trying to short or fade this, right? Where you and I are looking at this and we go, holy crap, who cares what's going on right now? The bear side is like a single direction. Oh my gosh, it's a squeeze through March. So any dip is going to get bought up. That's the perception. And it looks like any dip is getting bought up because people are covering. And then the bull side is almost the same way. So I have an outlook of, okay, for the next month, it looks pretty all right. And so then I go to today, right? And you look at today is that every dip's getting bought up, and you even have that sort of, right? Like every dip is finding buyers and every dip is finding buyers. It's not just like crashing out today. So the monthly map is giving you like a flavor of the market. Does that make sense? You want me to sing the Fibra song? Can I read USO's monthly maps? Yeah. So remember, it's just the best you can do. Opera gives us the data like once a day, overnight. We subscribe to the raw Opera feed and we crunch it. The entire landscape of position is only known once a day. And then when markets are trading in the morning, you're in the dark again. So once a day, you can get a printout of what's going on. USO, when it's like this, you can't read it. It's just like nonsensical. It's all over the place. There really is no easy to see direction. Now, one thing you can see is that the bull side is liquidating a little bit. This is interesting. So in 3 weeks from now, you're out of a bull zone. So typically you see this kind of pattern at like an exhaustion top. Once it like, and it looks like we're squeezing pretty hard on oil. But yeah, it's a great question because like, yeah, it changes every day, but it doesn't change drastically. Now in a transitional market like this, like a bull market is bearish for a month, you're going to see that, you know, for like a week, it was bullish. I flip-flopped twice. I'm like, okay, bear market, we're bearish and I'm gonna take it one day at a time. Then like 2 weeks ago, I'm like, okay, it looks like we have some bull signs. And then I'm like, nope, back to bearish. And then yesterday I'm like, bull market's back for good. But that's because the monthly maps are so developed to be bullish. A good bull monthly map is phenomenally easy to spot. This is so easy to spot. Can you see it's like a nice clean division? Remember USO we just showed was like a choppy nightmare, right? But this guy right here is a nice clean distribution. The bear zone just is like a nice little slope. There's no confusion here. When it cleans up like this and it looks like this months out, this is the sign of a bull market, which is great because as a trader, what you want to see is you want to see all the people that don't understand this shorting the market and selling the market today. And as the market takes a really nasty dive, which I hope it does, I'll be the first bull back to the party. You guys stay on the stream because I'm going to show you what's going to happen today. If the market decides to sell pretty hard in the bull market right here, I'll be the first person long right there to close right there. Just watch. I mean, just watch. We'll see. We'll see. If y'all stick around, I'll hit it hard enough to make it a 100K trade. I'll make 100. I will hit it with 5 contracts per account. If that gets me 50 points per S&P, and I do in 10 accounts, I'll make 100K. So if it falls, I'll risk blowing up all my accounts along there to show you guys a 100K victory. Y'all want me to see it? You want to see it? I'm going to fuck up my consistency if I hit it that hard. So I might close some of them out early. You have the light behind me? Oh, thanks, dude. I love it too. So let's say 50K because I don't want to blow my consistency roll. About to get payout here. I had to keep it about close to 3 to 5 per account. Okay. So the idea is while I know that the greater market is bullish, what I'd like to see is the market to overreact and panic. We are losing monthly hedge pressure. Not that good, and it can cause a gamma event, which would be great for the market to kind of like nosedive out. Now, let me tell you some other facts to go with it. Market doesn't have the volatility to crash right now. We are below our triple B level, which is really good. The market's clean. If we get above here, though, the market can collapse pretty quick. VVIX is below 100 as well. So we're going to have some clean trading, right? The market's not going to just, you know, easily fall. And you can see it's not really falling that easily. You going to make a top step account right now? You're so happy you found me on YouTube? Well, geez, Jose. Stop. You're making me blush. All right. Let me check on iDoc. Make sure she's doing good. Even so sick. She's usually late on the stream, but now she's too late. It's honey, I think like I said, I told you yesterday, I think she's dead. I think the flu finally got her. I don't think she made it. Rest in peace. Usually she's in the stream at this time. I'm trying to beef anyone, but the guest on Top Step is getting chopped up trying to short the shop right now. Ooh, let's go watch. I'm not beefing anyone in Top Step. You know, I love the guys on Top Step. I'm gonna tell you something. There's not a lot of professional. Let me start over. There's not a lot of God, what's the word I'm looking for? I hate to say this without sounding mean. It's not a lot of talent. People here are pretty average. Who's the guest? I don't even watch the show. And wait, where's the P&L? Let's watch. Hold on. Just watch a little bit. Is that the P&L at the top? Are they long or short? I can't even read this. They piss you off. Oh, that's so funny. Wait, how can I see their active position? I don't see anything on here. I just started using Top Step not too long ago. Yeah, I don't see an active position here. Maybe he flattened trying to trade the chop. No. So they, you know what they told me? I have some friends that work at Top Step. They were like, you know, do really well in the XFAs and we'll get you on the show. So I might actually go on that show at some point. There are people that are on that show that asked me to come on that show. They say, get on the leaderboard, yada, yada. And yeah, we'll totally bring you on the show. The whole thing is they want you to use their product and, you know, show it off to people and stuff. So maybe I'll go on there and show them a little razzmatazz. It says Jared, short 5. Oh. Ah. Yeah, see, everybody's trying to short this. I don't know. They need a little rocket scooter in their diet. Oh, here it is. Short 5 micros. Well, at least he's being smart and playing micros, although the short trade is not necessarily the right trade. But it's like there are people that just have this, it went up, it must come down mentality. I tell you, multi-map is so strong. Multi-hedge pressure is so strong. It's not a good place to short from. If he ends up being right, then he's going to be right. He'll get lucky on this. But you know what I'm doing? I hope he's right because I'm gonna back that trade up right there. I'm gonna get that big booty trade right there. Stacy says that makes sense. Strong Alan. He says think top up is smart in the best interest to make dumb trades for others to follow and bust. Because remember, every sucker. not a bad thought. As far as the conspiracy goes, they lose on purpose. Is giving them a little more credit than them just being not that good at trading. But yeah, they don't have any incentive to, do anything but show the plot. What these trader funding programs do, a lot of them pay these influencers to go out there and sim trade 20 accounts and tether them together because they want you to do that too because you blow up faster. That's the real conspiracy. So, but I think they're all like pretty. I mean, I'm not throwing shade at any of them. There's nobody on that show that I watch that makes me go, okay, these guys are incredible. Like Dakota's good. He's not terrible. And coming from me, that's a compliment. So don't clip that and say I say anything bad. I'm not impressed. I'm the guy that's not impressed by anybody. I'm not impressed by anybody at all. Very rarely does somebody trade and I go, wow, okay, this guy's good. So when I say someone's not terrible or I say someone's okay, that's about as good of a compliment as I get. Dakota's not bad. He's got a pretty decent payout from them. I wouldn't say his style is a style that's useful to somebody that's new. His style is definitely his style. I wouldn't trade like that at all, but it works for him, and that's good. So he's not bad. He's not bad. And again, me saying someone's not bad is one of the best. That's probably the best you'll get. So please don't cough and short into the microphone. Cough and snort. I'm sorry. Don't hate me so much, man. I'm sick. Anybody who copy trades a delayed stream deserves to have their money taken away. Really funny. Billy says, Rips goes on sometimes, used to go on a lot. I have never watched Rips trade. So I don't know. I actually never watched him trade before. I've seen the show with him on it, but I paid a little attention to it. Like sometimes I'll catch Dakota like in the evening one that they do the slow market or whatever. Like, God bless him. They make him do that to fill the time slot. But what a horrible slow. It's like the time you should be just relaxing from a crazy market day, not continuing to trade. That's some stamina, man. But I've never seen Rips trade. Wait, Rips has legal problems? Wait, what legal problems? I'm paying attention to what's going on there. How do I find the NASDAQ ticker on Rocket Scooter? So, Jonathan, what you'll do is you'll go down to the table at the bottom. If you want to do any futures, click on risk interval DD, and then it'll have all the different contracts over here. And so NASDAQ will be like NQ, etc. If they have one that isn't on this list natively, you can add it to the list by entering a ticker. We use the CQG designation. I'll type it in chat, CQG. They have their own ticker designation. So you can find out what they are. So down here, NASDAQ, they make you type f.us.enqh25. And so the easiest way to not have to type that in all the time is to go to your watch list and just add it. That way you could just click it and then you don't have to type it in more than once. No matter what strategy you use, the best thing you can have in the market is confidence because nothing is 100%, not even Rocket Scooter. Amen to that, brother. Thank you, Andrew, for giving help there. I need to mod you, Andrew. I don't like not seeing your name blue. What criteria is a good trader? Most of the YouTube traders are doing it for clicks and coupons. I don't say good trader is not like the amount of money that you make. Good trader is somebody that has all the embodiments of what a talented anybody would be. It's somebody that's good at A, entering and exiting the market, B, good at risk management. They have a system for risk management. They have a system for position sizing. So like me, why did I trade 2 contracts instead of 4? Right? I trade 5 instead of 10. A good trader is going to have a system for everything, and a good trader is going to have boundaries when they don't trade. If you don't have all of those things, I don't think you're that good. So an example is if you are always trying to find a trade rather than, okay, I'm going to sit out and wait for something better. You guys know me. I'm like a chess player here. I'm 2 moves ahead. I hope the market sells off so I can buy the dip at 21,230. Okay. So now I'm 2 steps ahead. I'm waiting for it. If somebody does something like that, I'm impressed. So if somebody is good, they're going to have risk management, position management, when to sit out, when to enter and exit the market, and be regimented and repeat themselves and have a system that they don't deviate from. It's never like, oh, maybe I feel like I should long today, or I'm feeling short. I don't know. No, let's long, whatever. That doesn't sound like a system. That just sounds like a gambler. And a gambler with good risk management can make a lot of money trading. But you ain't want to learn anything from somebody like that. But someone impresses me as somebody that draws on their screen 2 moves ahead. It says, if this falls to 230, I'm going to take the long. Right here, it's a little choppy. I have a not that good confluence with all my indicators, so let me sit out. I'm like 3 or 4 moves ahead, then I'm impressed. I'll be like, hey, this person knows something. I want to learn from them. And so that's where I'm impressed. Somebody can get like 2 or 3 moves ahead. Like, I hope the market sells to here so that I can buy there, trade it back up. When it gets there, I'm going to hit it with 4 contracts, every single account of mine, right at 230. I'm going to hit it with 2, let it overshoot. Actually, it might not even overshoot. I'll hit it with 2. Then when I get the confirmation, I'll add 2 more to each account. I'll trade it right back up to this orange line, and it's going to take like 4 hours for that trade to take place. Because the amount of distance we have to travel and there's no volatility in the market, I know it's going to take all day. So because we're down here below this white line, it's not going to be easy for that market to climb back up. So if it does decide to fall, which I don't think it will, it's more likely to just rally from here. But I hope it does so I can get the really big trade just to show off. And right here, what it does is it does this. And right about 11 and then 12, it's like here. And then 1, 2, and then does this, and then closes there. Right? And that might take all day. So here I have this thing break, then it fall quick, no volatility, so climb its way back up, take all day to trade, and be here committed all day with 4 contracts. The maximum risk on this will be $2,500 an account. Maximum gain on that looks like it's going to be 50 points on NASDAQ per account with 4 contracts. It's 4,000 per account times 20 is going to be $80,000 trade. So did you hear everything I just said? That's 10 steps ahead. And if somebody talks like that, then I'm impressed. You see the difference? Somebody can be good, but for me to be impressed, it's like, you got a plan. Like, look, how detailed is my plan? And that's like hours away. I've even plotted out how long it's going to take. I could be completely wrong on all of this too, but it doesn't matter. My plan is that intricate. Does that make sense? That's why I tell people to read outliers. You may, like, and I tell people this, like, you may think you're like this close to being a master trader, right? Some people are like, man, I've been doing this for a couple months. I almost got it. I mean, I made like 20K last month. I think I almost got it. I think I can do this. But what I want you to do is listen to me talk on how detailed my plan is. And I want you to be like, holy shit, this guy does a lot. And that's why I tell people to read outliers, because the people that are like really, 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 really good at what they do, and I'm not even saying I'm really, really, really good, but people that are really, 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 really good are going to have such intricacies to how good they are. Like fucking Yo-Yo Ma playing his cello, sitting there. He's got so much going on up here. You don't see it with the gentleness of him just playing, but it's like the master of their craft has such an intricate network of how they think or react to whatever it is they're doing. Does that make sense? So when you hear me talk about my plan, you should go, holy crap. I'm like, I don't do anything close to that. I just kind of push buttons. And it should tell you like, wow, I've got a long way to go. And that's what we hopefully can inspire that in people. So my 2 options today, like I've got, this is probably what's going to happen. This is the backup plan. If it falls, it's bullish enough for me to take a long sort of thing, right? So planning is the most important part of trading. Like I said, it's about an 80K day if I get all those trades and hit it in all my accounts. How confident am I in the greater bull market? Best sneak is Oliver Velez. By not many people know about his stuff is really good. Yeah, I like to learn more. Anybody that's like a savant or really talented trader, I'm such a sponge for people that are like so fucking good at this stuff. I love it. I love to learn from anybody that's like, but anybody that's talented. I've seen so many average traders in my career that nobody really does something that impresses me. It's very rare because I've seen it all, but I'd love to see somebody that's just genuinely talented, if that makes sense. That would be really good. Any experience with Tick Trader? Never heard of them. Believe me, you holy crap me daily still. LOL, right? Read outliers. What it tells you, there's a lot that you learn about people that spend the time to master their stuff. It's like learning a language. I may talk really quick and have a lot to say. To me, I don't even feel like it's complex. It's so routine to think that far ahead. It just comes with years and years and years of practice. Once you do years and years of practice, you'll get better at just the discipline is what gives you routine. So if you know, like, this is what I do every single time and you repeat it every single time, you get used to seeing like all the plan. Like as you get better at it, you start to see like more and more steps ahead. And that's kind of like what you want to do as a trader. Just practice. But you have to practice the same thing every time. You can't have a different technique every day. You can't trade by the, like shoot from your hip every day. You have to have the same regimen every single day. That same regimen every single day allows you to get talented at that regiment that you do. And therefore you can kind of see like, okay, if I can go this way, go that way, this way, I'm going to pump fake, turn around, spin, shoot. Like you ever watch Hakeem Olajuwon play? Arguably, the greatest center in the history of basketball. I would say I'm a Houstonian. I think he's the best. Some people may disagree, but the Dream Shake was unbeatable. Okay. And you'd watch him play and he would just spin every way. And it seemed random. He never had like a specific predictable pattern. He was so talented at it and it was just effortless, but he would shake 3 people under the goal, and make a shot. And like seeing how somebody's so good at just what it is they do, mastering it, his brain is probably thinking like 20 steps ahead. He turns this way. He feels a little bit of wind here. He knows the guy's kind of stumbling. Then he turns and shoots him again. And then it's kind of like the intricacies of what that decision making is. From an outside perspective, you just look like a guy spinning around before they shoot. But as a master doing it, it's all feel. It's all the nuances. The motivations he has to like change his mind in a split second could be just a slight feel or a small sound. It could be something. Right. And so because when you master your craft on like that end of the bell curve, you start to pick up on like the intricacies, smaller things, the fine detail your approach. So the skill curve, or the skill gap between people at the very, very top and the people at the top is like to go from like 90% to 99% is significant. But to go from like 99 to 99.9% on the skill gap is so much just for that little tiny bit. The mastery level is all about small little intricacies that the average person can't pick up on. They have no idea why you're so good. And it's small little details. I say you have to read Outliers. It's such a good book. You have to be on the same level to understand something so complex. Otherwise, it just looks like it's making sense. Yeah. Tick Trader is pretty solid. Tick Trader. Yeah, I'd love to. Are they on Twitter or something? I'd love to check it out. Hakeem is awesome. Yeah, it is. It works in Pac. I know. Man, I grew up in the 93, 94 era. Rockets. I was blessed. I was blessed with the Phi Slamma Jamma. Hashtag I don't want to hear your nonsense. Don't come in here with that. He's the best, and I'm gonna die thinking that. Also, my bias is there are other people that are better, sure, but in my heart, he's the best. There are also people that undermine how talented Warren Moon was. He just played for a shitty team with a shitty coach. If Warren Moon and Earl Campbell deserved much better, these guys were best in class as well. We had some good players on our football team who just had terrible teams to play for. Warren Moon deserved as many rings as Tom Brady. I think so. I thought he was incredible. I thought he was a very good quarterback. Haywood Jeffries. I got Haywood Jeffries' autograph when I was a kid. He was doing a speaking event, I think at like a car dealership. And our Little League football team, we got to go out there and take pictures with him and say, hey. I was a quarterback when I played football in Little League too. Little 6-year-old Matt. Tick Tick Trader is a prop firm. Oh, I didn't know that. Cool, cool. Akeem was even the best center from Houston. Yao Ming. I don't know. Yao Ming was good. I don't know. Yao Ming didn't play. Yao Ming didn't play in the golden era of basketball. He didn't have. I don't know. I would like to say that the Michael Jordan, Larry Bird era was a much stronger defense to play against. Like Yao Ming's era wasn't as good. He had easier time. I mean, we went back to back, against, Scottie Pippen, Michael Jordan Bulls. I mean, we played some of the best players that ever played the game. So I like to say that era was a lot more competitive. That's how I always thought about it. Like 92, 93, 94, 95 basketball, that was like the golden age, man. Golden age. 90s NBA was fire. That's right. That's right. Bo Jackson. Dude, I remember all this commercial with Bo Jackson when I was a kid. Problem with comparison with sports is that most of the good ones get injured and can't play anymore. It's true. Archie Manning is going to be a problem. Yeah. Yao was just good. He was good, just fragile. Deion Sanders. Yao Ming was overrated. Thank you. I mean, he was good. He was like 11 feet tall. He's good, Carried the team. But there was just something. I tell you, when I was a kid in like the 93, 94, like that, I went to a lot of the games. And it was just so exciting to see the home team just so good. 80s were great. 90s with Bird and Magic. Yeah. Two greatest athletes, Bo Jackson and Wesley Berry. Two scoops. Akeem was way better. That's what I think. And I went to U of H, so I'm like, I've got double the amount of love for Akeem because, him and God, I have brain fog. He went to U of H. Who was the coach at the time? At U of H. Guy Lewis, yeah. So it was Akeem and Clyde Drexler, and they played NCAA. They went to the Final Fours 82, 83. This is how I think of this, right? 82, 83, 84, and then the same two guys took us to the championship when Houston was terrible at basketball. I mean, it's a championship mindset to win in college and to win in the NBA. You know what I'm saying? Yeah, the full platform sub. Is there anything extra on YouTube Rocket Scooter subscription? If you have the full platform sub, so the subscription on YouTube is we haven't done anything extra for it, but we will at some point. It's more just like an honor badge of people supporting the platform. So if you want the green tag, that's like our donation, if you will. So we have 20 employees who work for the company, and everyone has salaries and stuff. Every little bit just goes back to the platform. Like when we do the $1 a course, or you pay the $5 or whatever for the honor badge, it's just a donation to the company. So some people are lifetime and they bought the platform like 4 years ago, but they're like, how can I still support the company? I'd love to. And so then we see can optionally sub to the $20 classes or sub to the $5 this or $6 Twitter. It's more like a tip jar. And it goes a long way because, some of our employees, just those little things pay a couple salaries. Enough people do them. So if you guys want to support by doing hashtag has a little green thing with the dig shovel next to it. Grew up watching the Celtics, Lakers, and the Magic and the Bird era. Jordan was great, but after that you lost interest. To me, they just don't play the full game anymore. Maybe call me getting old, but I mean, I still watch a lot of basketball. I just don't. It doesn't feel as exciting. Maybe that's just what happens when you get older. It doesn't feel as exciting. But I think I've also been, And it's crazy because, you know, I'm in Houston, right? I mean, the Rockets have been crushing for the last, you know, they've been doing, they did well for a while, you know, like we have some good sports teams right now. Astros been doing great. Rockets been all right. But I don't know. I think the last, like Harden stuff, I hated that team. JK, welcome to the Commander Squad. What's up, man? Thanks. Appreciate that. Clyde the Glide. Akeem the Dream and Clyde the Glide. Oh, yeah. Phi Slamma Jamma. That's what, yeah, that was the, and even when I went to UVH in the 2000s, you know, they still was like, you go into the arena and they still had like, you know, Phi Slamma Jamma stuff, even like 30 years later. Basketball sucks now. We've been kind of excited about, you know, IDOC is a Longhorn. And so, you know, it's interesting watching the Longhorns be good again. It's been a while. You always got to say, like, you know, God bless Matthew McConaughey for being dedicated to like such a terrible team, but going to all the games. And I always make fun of her for it, but they never won the SEC this year. So once they finally moved over, what a crazy shift, right? U of H is in the Big 12 now. Like, they used to be in Conference USA. Like, everybody shifted around, and watching the SEC, I think that's going to be that college football is going to be good from here on out. How competitive the SEC is now. Oklahoma, Texas, A&M, they're all there now. The SEC now is kind of like what the Big 12 was in like 2008, 2010. So that'll be fun. Texans going to win Saturday. And the one thing I don't care about is the Texans. I'm a Cowboys fan when it comes to pro. I know it doesn't make any sense at all, but I'm a Cowboys fan when it comes to pro football. Once we lost the Oilers, and the Texans just were dog shit for so long. I can never get into the Texans. I don't know why. But yeah. College ball is greater than pro. Yeah. I do too. When I consider long ES now, it's not a terrible idea, but for some reason, the choppiness that we're experiencing right now with the lack of the VIX is not giving me a lot of hope. I would like to see this try to flush, to be honest, but the proper trade right now, the S&P is definitely supporting. It's not a terrible idea, but the problem is that Nasdaq resilience is negative, so the Nasdaq stocks aren't giving us the momentum that we need. As you see, every pop is getting sold a little bit. This is highly unusual. I could try to get like a 25-point scalp in S&P, but I'm not really sure. Hold on one second. I think I'd like to just wait to see if it flushes and then grab the dip at the bottom. I think I want to see a bunch of bulls get squeezed out, and then I want to be like the first person in. What do y'all think? Oops. All right, so what's everybody's favorite college football team? Garrett likes Notre Dame. Like, who do you guys like? How about NFL and Texans? Yeah, like I said, I've always been a Cowboys fan. Well, even when I was a kid and we had the Oilers, my brother was a Cowboys fan. I was like an Oilers and a Dolphins fan. When I was a kid, I liked the Dolphins because I liked the colors. Turquoise is my favorite color as a kid. But then like I kind of like joined my brother, and we all had like Cowboys jerseys and Cowboys blankets and stuff at the house when we were kids. After the Oilers left. Playoff rating shot the better heard. Yeah. Really? Interesting. Midwest Gold, only 600 to go on the ETF. Ooh, nice. Transfer portal is even the playing field in all college sports. SEC used to get all the talent. Now it can still get all the talent, but they can transfer out. Oh. Much better waiting. Chop zone. Yep. I think if we were going to see a reversal, would have happened already. I'm in the same boat as you. Interesting to see a lot of choppiness without a lot of volatility. I think that has to do with just money shifting around. And you always trust the S&P resilience being positive as being a good sign. The market's not going to crash out, but it'll be good. Notre Dame, the Broncos, Razorbacks, Colorado, Mets. You're a Nebraska alum. Good while I was in college in 2001, but there's a light. Oh, so we're all like the same age. That's cool. That's when I went to college. Wyoming. What about the real Cowboys? Bison. Miami Dolphins, Florida State. Oh. Everyone's from the USA. Okay, well, what's your favorite team? I guess, well, I mean, you guys, anywhere else in the world, everyone watches the real football. So who's your favorite soccer club? Ice Wild. Not everybody's from the USA here, though. Wait, Francesco Medici, not from the USA, but likes NFL. Oh, that's cool. That's what I was curious if like US sports get a lot of coverage. You know, there's such a different like aura, you know, watching like European soccer and stuff, or even South American soccer. The love of the game is so much stronger there than our love of football is here. So to see like other sports like American football make their way out and other people actually like it, I'm curious if there's like the same passion for it like we have. Munich, Arsenal, Chelsea, Liverpool. You really can't relate with the NFL? Yeah. Don't worry. Like people here, like it's weird. In the United States, a lot of us like college sports more than we like pro sports. College sports are like so hyper competitive, especially when you're in the South, like in Texas, in southern states. Even high school football is something people watch more than college football. It's weird. The small towns of Texas, dude, the parents get in fist fights at high school football games. It's crazy. It's nuts. High school football. They had that movie, Friday Night Lights. It was all about it. It's really like that. Like in Midland, Odessa, and little towns in Texas. We're from Belize. Called soccer football. Well, it's called, you know, football, and ours is football with FOOT. So, and what a weird name we call it, football, because we rarely kick the ball. But it really should be called handball, because you're throwing a ball and catching a ball and handing off a ball, hiking a ball, trying to grab the ball with your hands. Why would they call it handball? Who knows? In Europe, NFL coverage is picking up, but it's still very minority sport over here. Oh, cool. Medici, are you Italian, Francesco? American football got so big in Germany, London, Brazil, and possibly Mexico will be getting there in our team. Oh, got approved by the board in countries already? Really? That's kind of cool. Football is fun. Like, it's a fun sport to play if you play it as a kid. It's really fun. So the DD ratio, what it is let me show you how it works. So the ratio, okay, so to explain what bull zone and bear zone is, I'll tell you really quick. So a bull zone is a way for us to identify call options that belong to a zero risk trade of market makers. My algorithm has the ability to do that. So bulls mean there's a whole lot more calls than puts for a specific scenario that we're looking for. Zero risk trades is an example. The example I like to teach that's easy to understand, if you as a trader were to buy like 1 million shares, like very rapidly, you just want to buy 1 million shares. You put in a big fat order to buy it. This is not something you normally would do, but say that you did. There's not 1 million shares on the ask to cover to you. So usually a liquidity provider, a bank, or a market maker, right, is going to be the one that sells you those 1 million shares. They're going to have to jump in and inject the liquidity, right? And so they don't want to be short the market with such a strong buyer because they're basically contrarian to an up market. So because of that, they buy calls to go with it. So they're short to you, they buy some calls. So this is a neutral trade, right? Buying calls, shorting the market, neutralizes itself. If you delta hedge this trade by having the appropriate amount of calls to shares ratio per the delta and use other factors like gamma and theta and other Greeks to match your risk of that trade, you can have zero risk at all times to be engaged in a trade with somebody. So what we look for is we can isolate in the options order flow these market maker calls that we find like tandem trades to go with it. So we can say, aha, that call is part of a hedging strategy. And so we rip out all those calls that are part of a zero risk hedging strategy. And when there's more calls than puts, it's a bull zone, and more puts than calls, it's a bear zone. Essentially, this is where bulls were trading the market and there wasn't a bear to sell to them. This is where bears are trading the market and there wasn't a bull to buy from them. So far, so good? So a bull zone is just showing you that where price is right now, there's so much call pressure being in the money that calls that are in the money are likely to get longing to hedge, right? Because anytime a call expires in the money, somebody needs 100 shares of that stock by expiration. So in a bull zone, the market just has this kind of like a wind blowing it up. Randomly throughout the day, somebody's going to be filling out buying 100 shares or 50 shares or 60 shares of whatever stock. Does that make sense so far? Everyone follow? That's what a bull zone and bear zone is. It's visionary. So bull zone is just a boundary to where bullish pressure stops. Once you fall out of here, you no longer have that imbalance. That makes sense? Okay. So what the DD ratio is to state the following. It looks at all the stocks in the S&P, and it's the percent of total market cap, not just stocks, that are in a bull zone divided by bull zone plus bear zone. So what we do is we take every stock at any point in time and say, where is that stock? Amazon, Tesla, Microsoft, whatever. And then we say, okay, current Microsoft market cap is in a bull zone, and this is the market cap, then it goes in the numerator. We exclude anything that's in neither zone. So if something's in the middle, it's not really counted, it's balanced. And in between the two zones, the market's actually balanced. So we sum up all this market cap that's here, just add it all up, and then we divide it by the total market cap in both zones. So it's basically just a bias indicator, excluding the things that are neutral and choppy, of the things that are straight bullish versus straight bearish. How's that seesaw tilting is basically what it's saying. So if the number is 5, it's balanced right in the middle, 0.5. Anything greater than 0.5, it's tilting to the bull side. So the answer, what it's good for is to say, like an example, QQQ or SPY has their own bull zone support. Typically, its own options lifts it. But you ask yourself, if the majority of the stocks are bullish, why would the index do that? So the idea that the index tracks the stocks is what we're exploiting here. The DD ratio is almost like a boundary condition tiebreaker here. Would I buy if we fall to bull zone? Would I buy? Well, yeah, because the majority of stocks are bullish. Why would the index sell off if the stocks themselves have a wind of pressure pushing them up? So the DD ratio is a strength indicator of the bull market. So if this were to fall right here, and that ratio is greater than half, I might hit that with like 5 to 10 contracts. I'll hit that really hard because the stocks are supporting their own bull zone support. So the index tracking the stocks is likely to do the same. If I get there and the DD ratio is 0.3, I might long it with 1 to 2 contracts instead, because the stocks are not supporting it. I'd still bet that the index is likely to follow its own path, but the stocks are giving me a clue what to do. Does that make sense, visionary? So we're using the arbitrage between the stock's value and the index that are tracking the stocks and comparing it against the index's own desire against its own structure to move up. So you got to remember, things like the QQQ are trading on their own. They have their own supply and demand. They're going to move on their own. But at the end of the day, QQQ also, think of it like this. If the stocks are trading up, QQQ is also following the same index. If somebody goes out there and buys a whole lot of QQQ but doesn't buy the stocks, it's going to go up, and the stocks are still going to stay the same. But once that buying stops, QQQ is likely to snap back into place to continue to track the stocks, right? So the idea is that if there's any discrepancy between the stocks and what the index is doing, it's an extra clue. So if like the index is like teetering like right here, and the DD ratio of the stocks just plunges, and the index is somehow bouncing, you know you got like a spring between these two. The index is likely to snap down to meet the stocks. It's useful like that, yeah. Dude, I've got a no, I have a tablet. I draw on it with a pencil. But it's turned off right now. I need to turn it back on. I turned it off when I got my new monitor and it was acting all glitchy and stuff. But there you go. All right, so today, keep my 8,000, just chill on this one. Resilience is getting better on the S&P. I don't hate it. I don't hate it at all. What do you guys think? What do y'all think? Every bone in my body wants to push the long button from here. Look at this. Really strong recovery on the S&P. Dare I? Looking good. All right, this is it. Vixen decay. It's probably going to bump from here. I think long chair is going to pay out pretty good. I'd like to see the bigger trade personally, but this might try to fill the gap one more time. This indicator right here is a gap fill predictor. The S&P is pressuring to fill the gap up this way. That's a nice clean little recovery. We're going to get it. We're going to get the run. It's going to move. I think this is the one that does this. I think this is it. The stocks just started moving. You guys see that? Look at this. We're good. I think this is good. Why don't I try it? Why not? Why the hell not? Yeah, so it's not longing under. So the problem with MHP, you're saying like, would I long under MHP? It's when MHP breaks, then the market's irrational. Breaking is different than being underneath it. Being underneath it is okay. There are definitely long setups underneath MHP. Positive resilience. We're going right back up to fill the gap. I'll take that long there. Well, yeah, so let's watch it go. Not bad. $8,000 today is not a bad day. Let's see if we can make a little bit more. All right, let's go check Twitter. All right, y'all want me to sing the song? All right, let's go. I'm going to sing the song. Where's all the gurus and their fat stacks? I'm gonna find some wins. Looking all up and down my feed. Where's all the 20 apex? Why's all the gurus trying to fade this run? That's why nobody's winning any trades. Where's everybody else? Why is it so quiet? Where's all them gains? Jeez Louise. Everybody's so loud yesterday after CPI. Where are them gains, man? Where are your gains today? That's yesterday. What's some gains? Let's see it. We had a quiet day in the market today. Wonder what's going on. I don't see any Simfluencer 20x Guru Apex trades in here. Oh, I don't see anybody doing anything. I'm long the market again. Let's go. See, patience. We live by 3 rules here, okay? When it comes to my stream. You're here for patience, comedy, and execution. See, I'm just talking about basketball and the Rockets and how if you think Yao Ming is better than Hakeem, I hate you. I don't care. But then now we're talking about once the trade sets up and once resilience goes. I'm jumping on the long. Maybe I just made another $3,000 across all the accounts. Comedy. Shut up, Bogey. You're not funny either. Nobody cares what you think, man. I'm just going to fill the gap and close the position right when we get up there at top. Tippy top. You know you come here for the singing. Don't even lie. Shut up, man. Are we winning? What's up, Maddie? Yes, I'm winning today. Not a bad day. You can see how resilience is my attack. My attack one. How the boys at Top Step doing? Ooh. Sitting out. Jared with this short on micros that didn't pan out. Poor boy. They need some rocket scooter in their diet. I'd love to give it to him. I wouldn't lie. Not throwing shade, but where's all the gurus and their big wins? Where's all those Apex 20 accounts? I don't see those XFAs. Where's all that take profit gains? Why is my feed so quiet today? Where are them gurus and all their gains? I ain't seeing nobody winning today. What's going on? That's goofy. Where are all the people that were posting $80,000 wins yesterday? When they quiet today? They posted their loss today. What happened? What happened, guys? Where's everybody? What's going on here? Which closing and opening prices do I use? In the equity side, I'm using 9:30 to 4. On the futures side, we're using 6 to 5 Eastern. Where's everybody? Where's all them trading winners today? People trying to fade this market? I give them a little rocket scooter. Who tweeted yesterday the bull market's back? Come on now. Come on now. Everybody showing the upper trend line? Oh, they're gonna learn trend lines don't work. Oh my heaven! Look at this. Market's just waltzing straight up. The minute I notice the S&P resilience is going higher, we're gonna go fill the gap. Boys, let me explain something to you. They don't call me. What do they call me? 6,000 right back to the top. Tippy top. Let's take that profit. Let's close out and all the things. Flatten. Take, and we're done. All right. Well, that's pretty easy. So, anywho's. You know, they call me Gandalf. Yeah, they don't call me Gandalf. I'm a wizard. I'm a wizard, Harry. You heard someone say Top Step is like Jim Cramer. If you want 90% accuracy, just do the opposite. Oh, that's mean. This Top Step, those poor kids are trying hard though. They're not bad. I would just say they're newer. And it takes a long time to develop a lot of sophistication in your strategy. I mean, I've been trading for 15 years now. You know, it's not like some of these dudes have been trading for like a couple years. You know, they trade like someone that's been trading a couple years. Not terrible by any means. Not great. Not bad either. They're where they are. It's like watching a kid in high school when you're a pro player and saying, this guy fucking sucks. That's not fair. He's in high school. You know, you're a pro. It's years of difference of experience there. So at their level, for someone with lacking of experience, they're not bad. They're pretty decent for their level. But I'm just confused why you're showcasing junior folks instead of guys with 20, 30, 40 years of experience. But then again, the prop firm world is for new traders. So it's relatable, I guess. I don't know. But I know it's easy to meme on people when they're new, but we all been new at some point. I'm just saying don't expect greatness from something like that. I can't even clean my glasses no matter what I'm trying to do. Oh, that was good, guys. 2 good trades today. I'm good. Yeah, I do. I'm a fan of their show. I've had people, like I said, people on the show have asked me. They go, if you start working with Top Step and yada yada, we can get you on the show. People that are on the speaker panel that asked me if I wanted to be on the show. So maybe I might go on there every once in a while if I get invited. Toronto, do you like that? That was nasty. Oh, that's it. I just filled the gap and closed out. No reason to bet on a big breakout today. There's pressure from this hedge. Did you like that? Resilience, this is why I tell you about some of the tools we have. Can you guys see that the market was chopping around? But this indicator right here, what resilience does, let me show you guys something cool. We have a whole class on it. But let me teach you something. You guys want like a 5-minute lesson? All right. When it comes to a stock or a futures contract or whatever, what's the highest volume of the day? There's 2 spots that are the 2 highest volume points of the day. Let's see how many of you will know this. This is the 5-minute lesson. I'm going to tell you how I made that quick trade. That was worth $6,000. Can I tell you this trick? This indicator down here, this guy right here is a really, really good indicator. The open and close. Yeah, you guys nailed it. So typically, if you look at any stock chart, the open and close is like the highest volume, right? There's a lot of reasons for that, but you just got to trust us that is the highest volume. I'll show you what they mean. Let's pull up an equities chart. You can see at the bottom is like the volume, right, per day. This is an hourly chart. And you can just kind of see that they all kind of look like this. They're like little J shapes. So we all agree, like a big spike at the end of the day, no matter what the day looks like, it tends to have that same kind of shape, right? So we all agree the open and close is like the highest volume most days, right? Almost all days. So the open and close is a very key thing to understand what you're dealing with, okay? Now, on Rocket Scooter, QQQ is an index. Let's use QQQ as an example. QQQ, actually, let's use SPY as an example here. SPY is what we're talking about. Okay, so I'm trading ES futures, right? So SPY is an ETF that tracks the index, right? SPY can do one of 2 things. It can trade on its own, or it can track. So there's like about equals the SPX. It tracks the SPX, right? So SPY can deviate, but then it comes right back to it. And the SPX is like equal to the sum of the stocks. It's a function, like market cap, weight, all that stuff. Okay. All right. So if the stocks go up, SPY is likely to go up. If SPY deviates a little bit, it usually snaps back in place. Okay. And so SPY tracks the stocks. That's what this is telling you. All right. And so we're going to make some, we're going to put some little pointers on here. Well, number 1, SPY trades on its own, but ultimately will likely track the stocks under most circumstances. Okay. Stocks. So if I'm trading futures, ES tracks the same thing, right? ES roughly equals SPY as well, right? Because it also tracks the stocks. Okay, so now I'm trading futures. I made a connection. If the stocks go up, ES goes up. Pretty simple to see that. All right. So point number 3 is that the open and close, like you guys said, And equities is usually the highest volume. That's a key thing to take away. That's why I tell you guys you have to come to your class. We have a whole class on this indicator called resilience. We have 20 classes. Our classes are $1 a class. An hour of training like this for $1. We have the best classes. We had so many people sign up yesterday. It's incredible. We started. Let me give you guys the link really quick. If you guys like this, we would like for you to sign up. So it's 20 days, $20. It's our Profitability Mindset Boot Camp. It's what we do. It's $20, not $200, because I don't need to sell trading courses to make a living. It's $20 so that you take it seriously to make it $1 a class, so that you're not just skirting through it like it's worthless to you. All right. So when the market gaps up or gaps down, so the open is today at 9:30. Okay. Closes yesterday at 4 p.m. So today, the first candle is here at the open compared to yesterday's close. Everyone, we gapped up, right? We gapped up. And the thing is that the markets gap up or down based on order imbalances. There's this process that happens at the end of the day called MOO, and the process at the beginning of the day, MOC. It's a way for like big institutions to tell a market maker, hey, I want to buy 100,000 shares of Apple at the open. And you have up to 10 minutes for market opens to submit that kind of order. And the market maker collects them in a bucket. It's like not a real bucket, but a digital bucket. There's all these slips. This person wants to buy 1,000, sell 1,000, buy 1,000,000, sell 1,000,000, buy 100,000, sell 100,000. And the market maker adds it all up and goes, okay, there's a buy imbalance, and I got to take the other side of that. Calculate. Okay, I'm going to open the price right here. And the market maker used to be a person. Now it's a computer. But the same thing is at play. The market opens at a price where it expects to balance all those buy and sell orders in the bucket. And then the entire bucket is filled at one price. Does that make sense? Hence the volume spike at the open. It's mostly that volume. And the volume spike at the close. It's all those orders filled at one price. The reason people do that is because if you need to buy 1,000,000 shares of something, or 1,000 shares, 100,000 shares, you're at the mercy of the market. If I just throw a fat long order at the market, I'm going to clear a bunch of tiers on the sell side. My fill price is different for all of those shares. But if I do the MOO or MOC, I get one fill price for my entire order. That's the benefit and why the people do it. Okay, so the note that in this bucket, there's a lot of buyers and sellers, i.e. the market's very liquid. So another thing you can run on your chart is the market is liquid at both the open and close spots during that process. Are we all on the same page? Everyone type yes, we're on the same page. Market's liquid at the open and close. Lots of volume, and it's both buying and selling. So the live classes are at 3:30. In our Discord, we post a link. All right. So the neat thing is that when you open up inside of this box on SPY, each of the stocks has the same thing. They've got a box, an open and close, and a middle. Let me tell you something neat about the middle. Just trust me on this before I go into it. The middle is always a high volume pivot too. We call it half gap, but as you see, one can't argue, there's the middle. You'll see that? The middle is a pivot. So what we found out was that when something is in the middle here, there's another, we call these postulates in mathematics, and I'm going to put this right here, postulate. A postulate is an irrefutable fact, if you may, that is the underlying framework of any theory. Like Euclid's postulate, right? It was like the smallest thing is a point. The shortest distance between 2 points is a line. These are postulates. You can't refute them. All right, so here's another one, right? They're almost like a postulate. Is that when price goes up, the market is looking for sellers, okay? Do we understand this philosophy? Looking for sellers. When the price goes down, the market's looking for buyers. Makes a lot of sense, right? You bought a house. You want to sell it for $1 million. Nobody wants to buy it. You got to lower the price, and then buyers step in, okay? So now you have liquidity at both ends. And you have a phenomenon, which is that at the middle, which is perfectly balanced between two liquid spots, if price just goes up a little bit, then the market's looking for sellers. And where's it likely to find sellers at? Well, the open and close is where there's a lot of buyers and sellers, both buckets at both places. Let's draw the bucket, right? So price is just slightly above the middle. It's looking for sellers. So you can take a guess. The next move is probably there to find them. And actually, as part of this lesson, it just did that. The market's constantly looking to rebalance those imbalances at the end of the day. As the imbalance is taken by the market maker, they're looking to redistribute their risk back to the market. We call this process the redistribution zone. Pickle did poop. This is part of the lesson. It was a small poop, though. He may need to poop again. Take him out. So from the middle, if price is below here in SPY, the market is seeking to fill that sell order with where there's likely some buyers at the imbalance. And as you see throughout that entire process of rebalancing the imbalance, at the open, there's volume, right? At the middle, there's volume. So all day long through this zone, the market makers are trying to rebalance or redistribute the risk by doing that. So if this makes sense to everybody, what we're now going to do is tie all these freaking postulates together and make an assumption. If every stock in the index had the same process going on, we had Apple, right? Plus, I don't know, Meta, plus, also has a zone, right? Plus all of the stocks, plus up to the 500th company, has the same process. If Apple and Meta and all the ones were sitting exactly in the middle, then the market is perfectly balanced. But if just for a moment in time, Apple finds some buyers and it moves up just a little bit while all the other companies are flat, what we do is we calculate how much Apple's, if I were to snap my fingers and every stock was to complete its journey to one side of that box, we call it the implied move. So Apple moved up a little, and we calculate, well, Apple needs to move up like 60 more cents to fill the box, and no other stock needs to move. Then we recalculate what the SPX should be based against what it is. So this is what the SPX is, where the stocks are at, but the SPX should go a little bit higher if Apple were to fill its gap. Do we all follow this? If Apple is raising prices looking for sellers, well, it's got to fill its gap this way. So what we do is we look at all 500 stocks together at the same time, and we add up all of those implied moves. So if I were to snap my finger, the S&P really should be this value. The S&P should be priced 0.5% higher. And SPY is underpriced to that. So if the SPY is lagging, the stock's moving first, we designed an indicator that shows you that. What this is telling you is the sum of all the stocks were already doing this in their own boxes as early as 9:30. And the S&P was lagging by 30 minutes. And as the stocks, more and more stocks were jumping to this side of the box, looking for sellers, the S&P was not. So resilience is an arbitrage indicator for futures traders to exploit the fact that S&P's got a spring tied to the stocks inside of it, and you had an early signal that the stocks are filling their gap as early as here. Even better, when SPY and S&P futures were trading down, the indicator shows you that the stocks were trading up. It's a balancing act of the delayed effect of the S&P stretching too far away from the stocks, or the SPY stretching too far away from the stocks that it's tracking. And if the stocks are moving higher and in an environment where the S&P is more likely to track the stocks rather than crash and sell out, that is the first, if not only, leading indicator that exists on planet Earth for retail traders. It's such a good indicator. So many people out there, Trades by Matt uses it, okay? A lot of my friends out there use it. Jordan uses it. Wolf uses it. Resilience alone is a gap fill predictor on the SPY, is what it is. So it's not, again, the stock market's random, but what it takes the assumption is that if price is moving through the box, it's looking to find sellers and they're likely there. And it's also taking the assumption that the SPY is tracking the stocks. So anytime you're down and S&P is trading at the bottom of this box and resilience is positive, we say it's likely to fill the gap this way. When resilience was negative, the S&P is likely to fill the gap this way and stay on that side of the box. You see how it's pushing down? And all of a sudden, the stocks are now on that side of the box, and now it's got the pressure to push it right back up. And I closed my trade right there, and I was $6,000 in like 9 minutes. You see that? The middle pivot is the halfway point between the open and close. It's called the half gap. It's a whole... It's the S&P 500. So SPY is tracking the S&P 500, so are futures. And futures and SPY are really tethered to each other. So it's telling you if the ETF, because remember, SPY can trade on its own, futures can trade on its own, and the stocks could just be moseying along. And so because like if some firm wants to go out there and short a bunch of future or sell a bunch of SPY, but the stocks are unwavering, as soon as they're done selling those futures or selling the SPY, it usually snaps back up into place to keep tracking, right? So this is showing you that process. Now, some firm was selling SPY and selling futures, whereas another firm was buying stocks in abundance. And you got that signal exactly here when the stocks were pushing this way. So why would the S&P that's tracking this push this way when the stocks are pushing that way? Resilience is my favorite indicator on the planet. It's my bread and butter for scalping. I play this range all day long. I made money trading that off of resilience. I made money trading that off of resilience. Most of my trades today were off of resilience. You like it? It's arbitrage, and it's designed to be a leading indicator. Now, when these lights are all green and yellow, it's perfectly leading indicator. Sometimes it's 30 minutes or an hour ahead of time. When these lights are red and yellow, the market's irrational, and sometimes it doesn't matter what the stocks are doing, the index just goes kaput because people are getting squeezed out of the index. So the more green and yellow you have, like the more stability you have in the market, the higher the probability that res is a leading indicator. And all it does is just show the S&P is going to fill the gap just because that spring snaps. But I don't bet on a rally, which is why I longed right here and X right there. And you guys got to see what makes me an outlier in this market, because I saw an opportunity and I waited and waited and waited and waited, and I took it right here. I'm surprised I didn't take it here, but I was like, oh wait, resilience is getting bigger. So right here I jumped in. And by the time everyone in Wall Street right now was like, wait, is it rallying up? Let me get in on this. I'm getting out. Like I said, all 15 of our tools are like this. They're cleverly thought out exploits, arbitrage, reverse engineer of CME algorithms. Our stuff is different. Resilience tracks how far away the SPY is, its implied value from its actual value. If the implied value implies that the SPY should go up, then resilience will be above zero. If all 500 companies of the S&P were exactly at their half gap, resilience would be zero. If just one company was above its half gap, just a little bit, and all the other ones were zero, resilience would be 100. If just one company was below its half gap and all the rest were at zero, resilience would be negative 100. It's a seesaw designed to tell you how far away the S&P is from its actual or its implied value. The higher the market cap, or closer to 100 and zero, the higher the market cap, the more severity it is. If one stock has to move this way, then SPY has 100% potential to move that way as well, because no other stocks are moving against it. So like most of the stocks are like moving throughout the zone and above the zone. And resilience is actually designed to be the most sensitive right here in the middle. So that a stock that's like continuing to rally like this isn't going to have that much of an impact on it. But a stock that goes from here to here has a huge impact. To show, essentially, resilience was designed with a mathematical transform. to actually determine how sensitive the market is to just a slight change in pressure. And I tell people this is the way to picture it. It's a seesaw with a bunch of bowling balls on it, one for Apple, one for NVIDIA. And it's so sensitive that a feather can land on one side of it and it tells you how much pressure it's applying. It's that sensitive to know, oh shit, a feather fell on this side. It's going to move. And so what you see is that like when resilience changes a lot in NASDAQ only and not here, you could tell that right here at about 9:30, it was one of the big tech stocks. Let's go investigate who it might be. Was it NVIDIA? Was it Apple? Wasn't Apple. Amazon? Was it Amazon? Meta? Wasn't Meta. They rally later. Microsoft? Let me show you. Well, Microsoft is part of it, but let me show you the effect of it. Just Microsoft alone piercing its half gap from one side to the other is big on resilience. Look how much resilience changed just by Microsoft moving this much. It's telling you Microsoft's getting ready to move this way. And then when it tucked back down, it dipped back down pretty quick. It's just, it's trying to tell you what the stocks are doing on that little seesaw in between those two high volume pivots. That's the feather that it is. Just this alone and just this alone and just this alone was enough to change resilience a lot. Even here, that big spike and pullback, that was just Microsoft, like bop, bop. So it really is designed to have a big impact on stocks moving through the zone or not. And again, Microsoft pushing through right here, look how much it changed drastically. And once we lost Microsoft there, resilience started to tank. So it's looking at the balancing act of just stocks like nearby that half gap, because that's where that momentum is going to be to fill the gap. You can see half gap is resistance all day long, right? As stocks are ping-ponging through here, we want to know what it looks like at the middle and how many stocks are starting to pick up momentum here, because it's almost guaranteed that that's where they're going if they move just a tiny bit. So the indicator was designed to be sensitive right at that midpoint. So as you see, it's a very complex tool that's very helpful for that. I don't know which, let's look at some of the NASDAQ stocks that were big. Was it Pepsi? Gee golly, it was Pepsi. Let's look at it, right? Pepsi's one of the biggest companies in NASDAQ. Let's look. Right here, just the push through half gap. Well, wasn't that big. Maybe just a little bit. Yeah, maybe it was Google. Yeah, Google, you can see right here. Right when Google pushed through, right through here, big changes as well. In both NASDAQ, in both S&P. You see that? So while NASDAQ was really kind of in a bad spot, just Google alone passing through to that side of the box has a big impact on the indicator. Y'all think that's cool? You got to check out the program. That's just one of 15 tools. Like I said, this is, you guys can get the platform for half off. Each tool is this sophisticated. And essentially, it's just a gap fill predictor. I tell you how it works. You can go out there and steal it from me if you want, recreate it. But all I do was I watch all day long and tell myself, at the middle, at the bottom, SPY's likely to do that or likely to do that if this indicator is above zero. The probability that this market collapses today is very low. But I take these scalps a lot when I see that building up. That this is below the box, even below the box, and this is moving higher. Baby, we're about to snap back into place and fill the gap. It's that good. And it was 30 minutes in advance. Now, again, nothing's guaranteed. The stock market's random. But this is what's called an arbitrage indicator. Technical indicators are all lagging. You guys might use them. They lag. They lag behind price. This gets ahead of price. It tells you SPY is lower price than what it should be if all the stocks were to fill their gaps. And as the stocks are filling their gaps one by one by one by one, SPY was still getting some kind of selling pressure. And then once that selling pressure stopped, after that low volume, it moved on low volume. It didn't even need volume to move because algorithmically, SPY needed to snap back into place where the rest of the stocks were moving. So it's not like it was even high volume to move the price. Pretty neat, right? It wasn't buyers that stepped in. It was just once the sellers stepped out, we exhausted the sellers there. SPY fulfilled its destiny to catch right back up to the stocks. And resilience was designed to do that. It's one of my bread and butter scalps. All right, questions you guys have. When they issue positive, would expect to break the yellow line. Higher probability of breaking the yellow line. You nailed it. You're not supposed to leak that TV and use your indicator for its actual trades. He's a big fan of, I don't know how much he uses it now, but he's a big fan. Big fan of resilience. That was one of his favorite tools of ours. What is the difference between DD and resilience? So as I just explained what resilience is, Questa, DD is a net sum of market cap in a bull zone versus bear zone. So while resilience is exploiting something called MOO and MOC orders, just the open and close. DD is an aggregate, also a leading indicator, designed to tell you based on the options distribution in SPY. So basically what it says is if SPY is trading down here and the DD ratio is greater than half, the stocks are trading up there. So SPY is likely to snap back into place or support its own bull zone. It's the same kind of concept. So DD and resilience are aggregates of the index components in the basket designed to tell you if like your futures are lagging behind the stocks. That's what it's designed to do. DD is tracking how much stocks in bull and bear zones. I got it right. Resilience tracks how much stocks are above the half gap. Nailed it. So it's two different processes that cause volume. Like bull zone, bear zone causes volume because people are hedging options positions. Open and closes volumes because market makers are redistributing their order imbalance that you see every day. You always hear like Apple closed with $200,000, 200,000 share sell imbalance, right? That's what that is. Gus says, how do I deal with gamma or total deltas market makers? We use a lot of Greek calculation in our algorithms. They're all part of it. It's not part of the resilience. It's part of the bull zone, bear zone, hedge pressures, all that. It's all Greek based. Hedge pressures rely on the Greeks. Part of their equation. Resilience should be very powerful with YM because YM is only 30 stocks. Well, technically, we should create a resilience for YM. We never really did it because it changes so much. We have one for NASDAQ. We have one for SPY. So we have one for QQQ. We have one for SPY. We have one for IWM. So Russell has one as well. So if I were trading like IWM, right? It's the same thing. Now, Russell's gap wasn't that big, but you can see like all day, right? Right about here, Russ flips positive, and we jump to that side of the box. Russell's trading down. Sorry, right about here. Actually, it's more like here. Sorry, Russell was here. I'm on the wrong one. So Russell's trading down. Russell stocks are trading up. Russell popped to the top of the box. Russell trading down. This never went less than zero. Russell pops to the top of the box and now supports at half gap for the rally. It's not changes often, but like there's only 30 stocks and it changes enough to where the indicator would always have to be babysat, and it's better to use the SPY resilience when trading Dow Jones. Properly, though, we should create one. It doesn't change that much, but it's so sensitive to one stock if it does change. The S&P doesn't change that much. They might change stock number 500, 499, but it's such small market cap, it doesn't affect. YM being a small batch of high cap stocks, just moving one out of the way drastically changes the indicator. We have to create a dynamic thing that updates it in real time, and we just chose instead not to do it for sake of like saving time. But more appropriately, we should make one and update it. I've created a tool to leverage the mechanics of the markets and how a dealer and market maker have to keep their books delta neutral. That's what hedge pressure is. This little indicator here. You see delta neutralization pressure this way off of hedge pressure from what you just said. Is 0 DTE data in here? Yes, it is, JK. Oh, you asked me something earlier, JK. I don't know if I answered it. You can get the satisfaction to get what the plan works. It's rarely the case with you. Oh. I do plan ahead of time. Yep. So that's it. Like all of our tools are exploiting something. They're not technical indicators that are tracking price, right? They're all designed to be leading indicators in a way. And why did I exit my SPY at the gap fill? Because whenever I take my scalps based on resilience, I scalp to next resistance, usually to fill the gap. As you see, you have a competing pressure right here, pushing things down. The spring snapped and we went there. I took the scalp. I got out of the way because I got things pushing down. You closed your short at 6,000. Now again, you already got your trade. So if I were shorting here on the same premise, I would exit there because this is greater than 0. It's starting to make sense? As Dustin, that makes sense, right? I wouldn't bet that the S&P is going to crash. Stocks are doing okay. Stocks are holding the fort. So like resilience is a great confidence indicator. It's one of my best confidence indicators I use for position sizing and exiting targets. If I were short, I'd exit right there because I don't have any evidence the index is going to crash. Stocks are doing fine and dandy. Nasdaq's looking a little booty, but the rest of the stocks are looking good. As a matter of fact, you know, and so like that's what I use it for a lot of time. Resilience is an insanely good indicator. I started learning that when you make an indicator for trading index futures, the important part is that you have to encompass the purpose of the future to begin with. It's not just like its own price action. That's half of the battle. People get it wrong. They're like, I'm longing on the VWAP. People say that all the time. I'm longing on the flag or the VWAP or the breakout or whatever. They're always saying that stuff. But that's just its own price action. It serves another purpose to track the stocks inside of it. If you don't have indicators that do that, you're missing half the battle. You can't just look at SPY's own price action. We do through options. Yep, there's pressure pulling it this way, liquidity map, but its desire to track the stocks is the white box. So the blue, the orange, the bull zone, bear zone is its own trading. That's our own way of finding its volume based on options. But it also has a spring that's yanking it to there, while this spring is yanking it to there. This one's pulling down. This one's pulling up. And it's fighting both of them right now. It's been doing it all day. So there's all these mechanics that take place in the market when you guys are just watching price action and missing half the battle. You're missing half your trades probably. And it's actually leading like EMAs. It was designed to lead because it actually calculates the value not achieved yet by a price. If Apple were moving right there, it knows that Apple can move this far before it finds the sellers. So we can say Apple actually needs to be this value, not this value. Therefore, the SPY is underpriced by a certain value. And so resilience will pop up to show you that that balance is tilted. The SPY is underpriced relative to what the stocks could be if they fill the gap. That's what that's saying. And as resilience goes higher and higher and higher, it means the S&P is further and further and further and further away from the stocks. Behind the scenes, the stocks were just doing this during that time. And that spring is stretching further and further and further and further, and all of a sudden it goes, pops right there to it. And it's really cool. I mean, it's designed for that very purpose. Now, again, I have a really good trading day today. What I'm going to do is just kind of let the market do whatever. I'd love to see the trade I want to get today. This is the big one I want. 21,130 or 230, 59.50. I want to see those as supports. My bigger setup, which I said, is if we fall there, I'm going to take it. I'm going to take it. Tune back in tomorrow or come to the Zoom calls. Everybody here, if you like what you saw, this explanation of like how the indicator works, our courses are kind of like that. Each indicator is very special. We have 15 of them. I certainly encourage you to come to our boot camp. It's the best thing that we do. It's 20 straight days and the courses are recorded. You can watch them. It's $1 a class. There's no reason not to do it. After 3 days, you can get your $20 back if you hate it. That link is how to sign up for it. The Zoom calls, our links are posted in our Discord every day at 3:30. It's about an hour or so less, and we go over one technique every time. It's a class that compounds on itself. We started over at class number 1 yesterday. It's 20 days. When we get to 20, we start over again. There's some people that are on their 4th go around. Repetitiveness is good. Today is all about position sizing. It's a class on not only indicators, on how I find entries and exits, but it's all about risk management and position sizing and how to bet correctly. Why am I only grabbing 2 indicators? Why not 5? Why not 20? I have a method for everything. Are the courses included in the 99 trial? Yes, sir, they are. The 99 trial is actually the platform of the tools and also comes with the courses, part of it. The courses were just, if you buy the platform, you're always welcome to come to the courses for free. They're always included. But there's some people that are like, not really to commit. So we're like, all right, we'll sell the courses for $1 a piece. I see people sell trading courses for like $500 and $1,000 for workshops. It's ridiculous. But I encourage you guys to go read the reviews. We started over, so you got to jump in now so you don't get behind. But I tell you guys, like I say, I show this all the time. Don't take my word for it. Go read the reviews of everybody that's taken the class. This is reviews since the last 4 months when we started doing the class. And I mean, and if you've taken the class, feel free to leave a review. It's all 5-star. Because the quality is exceptional for the price. Yeah, you can in Ninja. You just have to use it. It prints on our charts. So you just leave like one of our charts open to get all the tools. If you're using Ninja, kind of like what I do right here, I'm using Tradeovate. You can use like, you can just leave like one chart open so you can observe and see everything, or 2 charts open on a separate screen. Here, this is all you really need. I keep my futures open on the left. I keep my equities open on the right. So there's S&P futures, SPY, and then I got my DOM and Tradeovate there. Like that. You guys know what I want. I want to get to here, and I want to see DD greater than half, and I won't get that long off the bottom band. Yeah, I think it's 2:30. That's correct. I'm going to wait for that. So that'll be in a couple hours, so I'm going to go head out of here in a little bit. We appreciate you guys staying in the stream every day. We're growing like crazy. We, like last couple months, we've gone from like 100 concurrent to like 400 concurrent viewers. It's really nice. One question, though. You guys like the new thumbnail? I don't know if y'all like it or not. Change it up a little bit. I want y'all to vote. Tell me if y'all like it. Every once in a while, I get kind of like, I'm like, all right, I'm gonna change it up a little bit. I want to do something funnier than just the cartoon. So like, you know, let's think about, all right, this is number 1. Hold up. This was the old one, you know, cool matte glasses. You guys know, day trading live. It was like that for a while. But I decided to have like a little bit of fun. Change it up a little bit. Put some gold coins on there and just put a different picture of me, a real picture. Slightly different. Do you like the new one? You guys like Cool Guy Matt? I wanted to see some different colors. I wanted to do like gold or something like get rid of the green. Get rid of the red. Okay. So I'm going to keep the gold and maybe I'll just put cartoon Matt over here. Okay. But how about the design without the picture? I could put like cartoon Matt off to the left. Like me riding a scooter would be great. That'd be hilarious. Okay, but y'all like the coloring, right? The color's a little better. I just was like, I didn't like that as much. I'll go back to the cartoon. How about that? All right. Me riding a scooter would be pretty dope. This is your type of room. There you go. I'm a breath of fresh air. Thanks, a logic and math guy, accounting masters. Oh, nice. So like a lot of the people and a lot of the volunteers here that step up and do backtesting, they're all a lot of like programmers and engineers. And I mean, I'm a chemical engineer. I'm a data guy myself. Yeah, as a programmer since I was 12, and to me it's all about data. So we kind of made like, we're like a data geek club, but we made it easy for like new people and new traders to kind of like really catch on to it. It wasn't just us trying to, you know, like it's overwhelming to new folks. Our goal was, okay, we're all very sophisticated in our approach, and like, how do we make something that's easy for people to use? That was like our goal here. Yo, Gil, what's up, man? Good to see you, man. How do we need separate data feed for futures? Frank, you do. So equities data you can buy from us. Futures data, you connect the futures broker to the platform and you buy your data from your broker. So Edge Clear is or AMP or whatever. This should say AMP. It's a bug, but like I connected my AMP account and I buy my data feed from AMP. So futures data is typically $11 a month separate. We don't sell it, but you get it from your broker and it tunnels right through. I look constipated in that pic. Damn. Okay, I'm gonna do the cartoon. All right, we'll do better. Wait, your mom's coming with banh mi's? Oh my God. You know, I love when her parents are in town, man. Her parents come in town. They're always coming over with lunch. Always come over with that good Vietnamese food. Oh, I do. Did she get me chicken banh mi? Did I get chicken? You know I love chicken. I'm cool with whatever. Are there any eval sales? I think ETF still has an eval sale going on. Apex does not have a special sale. And I think Tradeify has a sale. Brett told me it was like 40% off or something. We have a code for Tradeify, so you guys could use it. All right. So you guys want me to do... So I'm waiting for the thing to fall. So you want me to use... Cool guy Matt on the gold background. All right. So cartoon me is more handsome than real me. All right, let's try it. So like that. Now the question is, should I like do something goofy like, hey guys, poking in the frame here. Hey. Does it look good? Like peeking in, like. How about me? All right. How about me write this? Is that better? Hold on. Those glasses are real, I'm not going to lie. That's an actual picture that somebody took. You can all see the reflection of my glasses. Fun fact, number one, these things I got at Bitcoin 2022, and these things are worth a whole lot of money. I bet you I could sell them on eBay for like tens of dollars because they say FTX on the side. Ooh. I've got FTX souvenir glasses. Rest in peace, Sam Bankman-Fried. Oh my God. So they were sponsoring the Bitcoin conference, you know, the year before. He stole those billions of dollars. But, you know, yeah, so that was this. And the reflection in the glasses, you may not know. Let's make it really big so you can see it. You can see really big. Is, yeah, Steve Aoki right there. I'm at a Steve Aoki concert. And he's throwing cakes at people. Looks like jump 22 glasses. Yeah, yeah. So you guys want me to keep the cartoon matte? All right, we'll do it. Make the head bigger. Okay. Waiting for the trade. So, like that. Hey, guys. Actually, that ain't that bad. That's not as bad as I thought it would be. Just the head like a bobblehead. How can I do? Oh, I know I can do that. Let's see. No text. That's funny. That's just being funny. Make the head bigger like a bobblehead. Maybe I can just do like a bunch of heads, you know? Like who needs a body? You know, then they can put like a head on the coins too. There we go. I think that's it. That's a new thumbnail. Can I post my first trade entry of the day in the Discord? Yeah, I will. I'll do it. My first trade. The people have spoken. All right. That's probably what I'll stick with. Okay. Riding a rocket. That'd be fun. My first entry of the day was pretty simple. It was half gap long on positive res to fill the gap. That's it. That's it. That's all I did. How able open to do 2 windows. There's a couple of videos in the Discord on how to use the platform, but you just pop out a window by clicking this button right here. Look right here. That pops out a chart. So most of our things you can pop out. Like if I go here, I can pop out this little resilience chart. We have little resilience side widgets just in case you want to keep it open on the side. But you can pop out anything by clicking the pop out button. And then once you arrange your layout on your screen, then you can go over here where it says save. And then you can save your window layout and it will save the entire window layout. So like, let me close everything down. Let me reload my window layout. Actually, I didn't save it, but put this here. And it saves the position on the monitors too. So we did it to where you can do multiple monitors. That's a cool feature. So like I've got my screen saved on multiple monitors and I'll just click save. And it will remember where all the things are. All right, guys. That was a fun day. Pretty decent, made some money. Question about the resilience indicator. So what happens when price breakout or breakdown out of the range? Do I not take any trades? So that specific indicator is useful for just the edges of the box and the halfway point. Inside of the box, it's useful for you to understand how SPY could pivot inside of there. Outside of the box, if we're trading below and res is positive, my brain thinks, oh, we're going there. Above the box and res is negative, my brain says, oh, we're going there. Other than countering the move above and below or the edges. It's not used anywhere else. It's just kind of useful for like an extra layer of information. Oh, there's that spring that's going to like pop it, right? You got a CL trade, Icewell? Nice. What are the market makers doing when price breaks out or breaks out of the range? What range are you talking about? Down here, like if it goes outside of the box, I mean, it's hard to tell what anybody's going to be doing. If there's more selling, like inside of here, if they had a 10,000 share imbalance, they're just finding buyers and sellers to kick it to, trying to neutralize. You don't know how long until they're neutral, right? And if market's just moving outside of the range, it's just because like there's more sellers and buyers in general. Market makers aren't trying to do anything but to find liquidity and provide it at the most liquid spot, you know? So if the market's lowering below the range, dealers are dropping their bid until they can match where buyers will be, right? So they're not necessarily manipulating the market or doing anything. If it's naturally trading lower, it's just because there's more sellers and buyers for the most part. It's a good question. We need a barefoot hillbilly riding rock scooter. Why don't you guys make some AI? What's a good AI drawing tool? What can I do right now to make some AI images? Let's do it. What's a good let's do it while we're waiting for the trade to take off. I'm waiting for the bounce. Give me a good link for a good AI tool that's not going to put a virus on my computer. Oh yeah, Grok does do images now, does it? Let's go to Grok and make some images. Okay, here's another one. Hold on. Draw me a bear riding a scooter. Let's see what this turns out to be. Ladies and gentlemen, I think we have it. This is incredible. Not bad, not bad. Okay, hold on. Can I save this? All right. That's not bad, right? Oh, that's great. Dude, I love this one. All right, all right. Bear looks scared. I love it. Okay, we're going to keep that one. All right. No, in football pads. Hold on. That's the one. I don't think Grok understood the assignment. Wrong football. Well, I guess no. Actually, no. It's kind of decent. It didn't do right. Let's try it again. Do hairless bear? Oh, that'd be funny. Do one of Trump riding a bull on a rocket? That's kind of weird looking. Those are both pretty good. He looks scared. All right, I'm going to post some of these on Twitter. This weird bear with his eye bulging out. The bull's got like 8 legs. Grok did not understand the assignment. That bear was pretty cute. This bear is a little weird looking. I don't know. What the hell? How are we doing on the trade? Yeah, market's still pushing higher. I don't think we're going to get the pullback to get the long on, but I've made 2 good long trades today. I think I'm pretty good. All right, give me one more. The horns are on his back. Yeah, that's probably why, the bear is a little scared. This is how AI was going to solve the problem. It's just going to change, instead of changing the helmet to make it easier to get the horns out, just decided to change the genetics of the bear, which AI is still working on that. It looks like Steve Buscemi. It kind of does, right? Hey there, fellow kids. That one. This one just looks like he's like whispering in his ear, shh, 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 just go with it. Just shh, don't tell anybody. And this bear is like, oh, I need an adult. This one just looks like he don't care. He's kind of like, he's like, hey, check out my helmet. He's like, oh, that's cool. Nice helmet, guy. This doesn't look that fearsome at all. Caption it. The dog costume of a bear. All right, let's do one more. Let's see if this this does something good, and then we'll call it. Like I want to see like a confused bear in the chat. Don't look at his face. He's just like, shit. Oh, that's great. That's great. That is awesome. Oh, yeah. Everybody that pulls behind ever have a little happy hour. This bear is like, oh. I'm going to put a caption on. I'm just going to say, shit. Oh, that's incredible. I don't know what happened here, but that one's not as good. This guy's just at the wrong party to begin with. And this guy's too confident. He looks like he's leading the pack. But this guy looks like he's in the wrong place. He walked into the wrong side of the room. He doesn't belong there. He's just like, oh, fuck. All right, that's going to go on Twitter today. Oh, that's funny. That's really funny. Okay. All right, I'm done, you guys. We'll call it. We'll see y'all later at 3:30. Don't forget to come to the classes. Today we're covering position sizing mechanics. The second class of the 20. Remember, $1 a class. If you support the group, we have 10,000 user accounts at Rock Scooter, over 6,000 active members in our Discord, one of the biggest futures communities there is. There's a reason we're growing, getting big. You guys hopefully come. We can teach you something about trading, about futures, about whatever. Discipline is our big thing. Our boot camp is not just teaching you about trading. It is a training on your mindset. It's to reshape how you think about markets, how you think about risk, and how you think about money. We'll teach you 3 things in these classes. Number 1, entry and exit targets, how to find volume. Number 2 is how to size correctly. If you make a lot of money trading for a week or 2 weeks and you blow it all up in a day, it's because you're sizing incorrectly. Your position sizing is wrong for risk you're taking. Most of our classes focus on position sizing techniques and how to know when the risk is too high. Volatility, VVIX, we have all kinds of tricks to tell you the risk of drawdown is high. You're blowing up accounts on trailing drawdown because you're not trading the right size for the volatility you have. All kind of tricks for that. And the third thing and the best thing in the classes that we teach is market avoidance strategies. You may come into the stream, be bored off your ass because I'm not making any trades. I'm joking around making bear pictures on Grok because I know the trade I want to make. I'm 5 steps ahead. I'm not chasing the market as it's moving. I know the trade I want to take because I plan it out, and that's what you'll learn how to do too. Planning ahead is the trick to doing this very well. Have a plan, stick with it, don't deviate. Market avoidance. I have indicators allow me to avoid crashes. I have indicators allow me to avoid unusual volatility. I have indicators allow me to avoid trading when I have, for instance, if resilience is going against the trade I want to make to the long side, resilience is negative, I may scale down my position, not trade at all. Using confluence to scale my confidence is kind of what I do at a mastery level that I think that is appropriate for teaching people. When you're trying to look to get better at anything you do, try to learn from somebody who you might think might be a master at what they do, not someone who's just kind of doing it a little bit. You want to have market avoidance, position sizing, entries and exits down packed. And those are the three things that a good trading strategy needs. If any of those three things are missing in whatever it is you're learning, you're not learning trading. You're probably just learning fancy chart reading. And in our classes, we prove that even a random trading strategy, longing the market without any particular indicator, makes money over time. Only if you change your position size to match the risk. To prove that that's the important part of any good trading strategy. All right, we'll see y'all at 3:30.